amount of sense right now if you're worried about missing out on any further rally. When you look into 2024, the question will be answered of whether or not this rally is lasting by people taking money out of money markets, out of treasuries, and putting it into risk assets. Personally, I don't think that that's going to happen in a huge wave. I think there's going to continue to be consternation. There's going to continue to be worry about whether or not things will slow too much. So where would you position in the stock market? Number one, if you're looking for growth that isn't as interest rate sensitive, healthcare is a good option for that. And number two, I think you do have to be positioned somewhat in the consumer, but I would go on the consumer staples side, just judging by what's happening in discretionary and the volatility of discretionary spending, especially on the heels of all of this credit buildup. And then you can still be in things like utilities, be in some of those defensive sectors, instead of just trying to chase the FOMO trade in tech.
So utilities, top of the pile yesterday, leading the way. Liz, thank you for the update on the big contradictions in this market right now. Liz Young there of SoFi. Your market at the moment, about 14 minutes into the session, advancing by, let's call it 0.5% on the S&P, doing nicely on the NASDAQ. Coming up on this program, Elon Musk's rocket company could be worth $175 billion.
They would say, what's the fastest way to make a small fortune in the rocket industry? And the punchline is you start with a large one.
SpaceX discussing a potential tender valuing the company at $175 billion. That conversation up next.
Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
So as you look back on your career, what would you say is the best investment advice you've ever received?
Probably the best investment advice that I never received, but that I've lived my whole life around, is surround yourself with really good people. I thought about it just today, like I do many times, what makes a great investor? A great investment firm is comprised of people who are optimists and pessimists and realists, because in the intersection of the debates that go across that wide range of personalities is where you find truth. It's part of the reason I'm so focused on freedom of expression. I see it in my own four walls, the robust and fulsome debates around how we commit our capital, what defines a good idea, what businesses to build or pursue. That's what drives the success at Citadel. And I've been very fortunate in life to have always had a group of friends who really push me, who make me better. And here I get to work with 3,500 colleagues who in their ways make me better each and every day. And collectively, as a team, we've had the opportunity to have an incredible impact on the financial landscape around the world.
they'll say, what's the fastest way to make a small fortune in the rocket industry? And the punchline is you start with a large one. So, it was tough going for a while. Our first 3 launches failed. Fortunately, the 4th one succeeded. If the 4th one had not succeeded, SpaceX would not exist.
That was Elon Musk back in June. Fast forward to today, SpaceX could be getting a major valuation boost. The company initiated discussions about selling insider shares at a price that values it at $175 billion or more, according to our reporting. The tender offer could range from $500 million to $750, with shares offered at about 95 apiece. This coming amid other positive developments as its Starlink system clears months of US military testing in the Arctic. Let's get to the team coverage. Ed Ludlow in San Francisco, Katie Lyons in DC. Ed, you help lead the reporting on this. What are you hearing?
Yeah, look, it's a pretty big jump from a tender that only just happened in the summer where the share price was in the low 80s. As a reminder to the audience, a tender is where employees and insiders can sell shares to outside investors. The price is set between the CEO or the CFO or COO of SpaceX and then the lead investor on that round. But $175 billion would value SpaceX within the top 75 companies globally if you're going to give a proxy against publicly traded companies. And a lot of people ask, well, what's it based on? And as you know, John, we've reported a little bit about some of the financials, the expectation that next year there's going to be a really big jump in revenue from about $9 billion in 23 to $15 billion in 24, where Starlink becomes the majority of revenue as opposed to the business of launching things into orbit.
Well, let's get to Starlink. Katie, I mentioned some positive developments. What are they?
Well, after 9 months of tests that concluded in June, John, Starlink, which of course is this satellite system that operates under the SpaceX umbrella, has passed U.S. Air Force tests in the Arctic. An Air Force research official essentially saying it found Starlink to be a reliable and high-performance communication system in the Arctic. Now, the Arctic is difficult for military communications, John, because it is a pretty rough climate. And through these tests, Starlink equipment was essentially put through high winds and very cold temperatures and was found to perform well. This potentially could open the door to SpaceX getting Pentagon contracts in the Arctic region, a region, of course, which is very important competition-wise when it comes to the China and Russia, which are both looking to exercise more influence in that region specifically. And this could just be another addition to the SpaceX portfolio of business it does with the Pentagon. Knowing, John, that Starlink already is very much involved in Pentagon business, there's been an undisclosed contract between the Pentagon and SpaceX for the Starlink operations with the Ukraine military. And this could potentially just see this relationship deepen even further.
Ed, one final question for you, sir. There is another way to exit, IPO. What's going on?
Yeah. Well, this is why I think there's such an insatiable demand to get into this tender offer, right? It's not a primary offer where SpaceX issues new equity, but it is a mechanism or last chance for investors that aren't already on the cap table to get in ahead of a potential Starlink IPO or spin-off. We've reported that that could happen as soon as the end of 24, beginning of 25. And we know that behind the scenes, some of the incorporation and legal work to put Starlink as a separate entity is underway. So it's kind of last chance saloon. If you want to get in now, and wait for the big IPO spin-off that could come in a couple of years' time.
Ed, thank you, buddy, for the update, alongside the brilliant Kelly Lyons down in Washington and in San Francisco, respectively. About 22 minutes into the session, broader price action pretty decent, up by 0.4% on the S&P, just off session highs on the NASDAQ, still up by, let's call it 0.6%. Let's get you some sector price action. Here's Abby.
It's pretty bullish, John, not surprisingly, with that gain for the S&P 500. We have broad participation in today's rally, led by communication services. This has everything to do with Alphabet and that AI chip that Simone was talking about earlier, processor, up 2.81%. The sector overall. Energy getting a little bit of a lift here, up 0.8%. To the downside, we have utilities and healthcare. Those are defensive sectors, as you know, John, so this actually makes it more risk on the fact that people are not seeking safety from a sector standpoint. Now, over the last number of weeks, we were talking yesterday about the regional banks. Now let's take a look at the S&P 500 financials into this week, up 5 weeks in a row, gaining about 14% over that time period. Right now, we're looking at a small week loss on the week. These are largely the insurers, but in any case, really a nice win streak for the financials, one of the top sectors over that time period, John.
Abby, thank you. Okay, coming up on this program, the trading diary. I'll share the estimates and the payrolls report that drops tomorrow morning, and you get a little peek of the lineup for tomorrow's show. From New York City, this is Bloomberg.
maybe I should go do something else. I can't do anything better than I'm already doing. I've already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
This is Bloomberg.
Almost 26 minutes into the session, stocks doing okay on the S&P, higher by 0.4%. That's the price action. Here's the trading diary. Coming up, the payrolls report tomorrow morning. Tuesday, CPI print just around the corner. Next Wednesday, US PPI numbers. Fed decision, Chairman Powell news conference. Thursday, it's the ECB's turn. I promised you the estimate in our survey for tomorrow morning, 186. On a headline number, 186, the previous number, 150. That number, the latest one. This is going to move around as we get more estimates going into tomorrow morning. The lineup, world class, as I always say, the best anywhere on the planet on Payrolls Friday. Mohammed Al-Ariam, Rick Reeder of BlackRock, Anastasia Amoroso of iCapital, Mike Collins of PGIM, all of that still to come tomorrow. From New York City, for this morning, that does it for me. Thank you very much for choosing Bloomberg TV. Good luck for the rest of the trading day. This is Bloomberg.
Are facing some tough challenges. Higher living and education costs and wages that aren't keeping up with inflation are making it harder for them to support themselves. And they're relying more on the bank of mom and dad. A new bank rate report shows nearly 70% of parents with kids 18 and older are putting their own finances in danger to help them. About half are dipping into their emergency savings or delaying paying off debt, while 43% drain their retirement funds. So where do you draw the line? There seems to be a generational gap, as older parents can't understand why being self-sufficient now is a lot harder than it was for them. Gen Z seems to think on average that 22 is a benchmark for covering the expenses, while baby boomers say their adult children should pay their own way closer to age 20. Either way, it's a family decision. Bankrate suggests having a conversation with your kids and setting a specific dollar amount or time frame for footing the bill.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong? Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. Coming up, we're going to check in with Stuart Paul. He's a U.S. economist with Bloomberg Economics. He's going to give us his outlook for a soft landing as well as preview tomorrow's jobs report. Lauren Grush, space reporter for Bloomberg News. Yes, BN has a space reporter. She's going to join us to talk SpaceX, some upcoming projects, and about this tender offer that may value the company at $175 billion with a B. That's coming up. Plus, George Patterson, CIO at PGIM, Quantitative Solutions, going to talk about the firm's emerging markets outlook here. But first, let's kick things off on this Thursday morning with John Tucker from Bloomberg Business.
All right, Paul and Molly, the major stock averages higher this morning and doing a lot of the heavy lifting. Shares of Google parent Alphabet. People are kind of hyped up for Google's AI model, which they call Gemini. Week jam-packed with labor market readings, data showing continuing applications for jobless benefits fell by the most since July. And, of course, we stop everything tomorrow with the jobs report from the Labor Department. Meantime, the everything rally that we saw in November can continue. At least that's according to Ben Laidler. He's at eToro.
I do think the direction is absolutely right, and we've all been given a little bit of a prelude to, I think, what's coming in 2024, which is interest rate cuts and this big rotation from everything that worked in 2023 to everything that didn't work in 2023, and it's going to get a big revisit.
Right now, the S&P 500, 20 points higher. That's up 0.4%. 45.68 on the index. The Dow has just turned lower, down about 10 points. The NASDAQ 100, the tech-heavy NASDAQ 100, 110 points higher. That is up 0.7%. Now, at the risk of having Paul's eyes glaze over Molly, the yen is stronger against the dollar. It now takes 144.63 yen to buy $1. So that's almost about 2% stronger. This all comes on the back of the news that the Bank of Japan may finally hike interest rates. So why do you care? Because the yen is a funding source. Okay. The Japanese government bonds, they back up gazillions of dollars worth of loans as collateral. So when you see a move like this, it kind of raises concerns about global liquidity.
Interest
I think
rates
that
up,
makes sense.
Down. All right.
Yeah, tell him, John.
I'll go with that.
Sounds good.
Do you give me an A, B, or C, or a D?
A plus.
Oh, you're too kind, actually. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Molly and Paul.
All right, John Tucker, thank you so much. Molly Smith joining us in studio.
Good morning.
We dragged you off the tennis court. And we got you in the studio. We're going to talk a little Wall Street, global Wall Street for the next 3 hours. So
yeah, I can make time for that.
Yeah, good stuff. Molly Smith, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're with you for the next 3 hours. We're streaming live on YouTube as well. Looking at the markets, here's John just reporting kind of some red and green on the screen out there. Let's check in with Bailey Lipschultz. He covers all the markets for Bloomberg News. Bailey, what are you looking at today?
Yeah, as JT mentioned, Google
Alphabet, however you want to refer to them, ticker GOOG or GOOGL. Best performer in the S&P 500, biggest driver to the upside for the index is coming a day after Google released Gemini, their, quote, largest and most capable AI model that the company has ever built. Analysts broadly bullish on the update, long-awaited AI model. Stock up more than 5%, biggest intraday jump since late July. JP Morgan analyst Doug Anmuth saying that Wall Street mostly yawned at the release on Wednesday, but he's encouraged to see the progress on the technological shift, so all things AI.
So you quoted Doug Anmuth from JP Morgan, who's very, very good. I'm quoting, oh, thank you. You quoted Doug Anmuth at JP Morgan, who's very, very good. I'm going to quote Bloomberg Intelligence senior analyst Mandeep Singh because I hired him. He's saying Google's Gemini can narrow the gap to its rivals like OpenAI's Chat GPT-4, Meta's Llama, and Anthropic's Claude. He quotes, Alphabet's distribution advantage with Search, YouTube, and Android will bolster large language model performance faster than rivals. So he sounds kind of bullish on that one.
Bullish, and it does make sense. I'm a big fan of Mandeep, and that's when you look at the ways that the company can implement the technology. Obviously, there's been such a funding war with OpenAI, with Anthropic, but if you have your own product in-house and you have YouTube and you have the underlying Google platform, implementation of AI seems kind of like a no-brainer. Sticking on AI, though, AMD up 3.7%, unveiling their NVIDIA AI chip rival. Analysts also optimistic. It seems like anything you do in AI, but these are some of the bigger players, so not your kind of one-off company talking up how they maybe some day down the road can implement AI in ordering a salad. AMD doing a better job, according to BMO analyst, at their second AI event this year, laying out their look for what kind of that portfolio and suite of options looks like. So again, a lot of jockeying for position when it comes to the chip makers.
And the chief executive officer of AMD gave an eye-popping forecast for the size of the AI chip industry, saying it could climb to more than $400 billion in the next 4 years. So there you go.
Massive TAM. I know, and when we talk about...
I like that.
TAM. Ooh.
You got to define TAM.
Please
total addressable market for those unaware.
Yeah, please help those like me in the room.
Well, yeah,
like,
no.
New acronym.
That's what, that's all that, I know when Matt's not here, so in honor of Matt, I will briefly mention Ozempic, the whole idea of that TAM being $100 billion when you see how large the AI chip space, just chips, could be massive, massive potential. Another company top of mind, JetBlue, ticker JBLU, up 13%. Strong outlook for year-end bookings, saying they're continuing to see people lining up and paying for flights. Paul, I know you're not a big fan of flying, but this comes a day after Delta reafirmed their earnings outlook.
I saw that. Yeah, I'm flying down to the Caribbean next month. So,
I know.
Yep. So I'm
going to do a radio from there?
No, probably not. But this violates my strategy or my policy of only flying when I get paid to fly.
Say,
so
stepping outside. S&P 500 passenger airlines index up 5.4% so far this week. So a pretty sharp move higher for kind of carriers of all size. All sizes, one stock to keep an eye on as well. To the downside, Chewy missing expectations on third quarter, talking down outlook for fourth quarter. This comes a week after Petco really talked about how consumers were shifting down some of their spending, buying cheaper food, maybe not spending as much on toys and things for their pets.
Well, I have a neighbor, a Rottweiler. His name is Harry. He's a very angry individual. I mean, he has some serious anger issues, but he's a big fan of Chewy.com. His boxes are there all the time.
Yeah, this is actually something to maybe look into that our next guest would maybe have a thought on of what does like spending on pets say about consumer discretionary for the economy. Like, no, seriously, I think like, we were actually looking into a story because remember my other job at Bloomberg is covering the economy when I'm not talking to you guys here. And we were thinking about, I think there was a buildup of a lot of stray dogs in like the Atlanta area and people looking into like, what's going on down there? Is this like just, people can't take care of their pets anymore? I don't know.
It's expensive.
Yeah,
it's not cheap.
It is.
Chewy, ticker CHWY, down 57% this year. Really? So was a big pandemic winner, trading to the downside. One more stock just while I have you. GameStop under pressure. I cover the memes. I love talking memes.
So is that still a meme stock as opposed to fundamentals?
Paul, you're going to love the update. Ryan Cohen, as part of their latest filing, will now be able to use their roughly $900 million cash and cash equivalents to invest in other companies' stocks in both the private and public market. So not in your 5% yield T-bills. They're going to be implementing a mutual fund strategy, apparently. So,
buyer beware if you own that thing. I actually was one of the companies I used to cover did that for a while. Decided they were in the broadcasting business, and they said we're going to use our cash to invest in auto dealerships.
What?
Yep.
The strategy. I remember when
diversification?
Easy downgrade. Easy downgrade.
Peak meme mania, AMC invests in a gold miner, and you're just kind of like, I'm sorry, that logic is not lining up.
AMC, the movie theater.
Movie theater, yeah.
Right.
Yep. Movie theaters,
Confirming.
gold mines.
Okay.
Yeah.
All right, Bailey Lipschultz, thanks so much. We appreciate that. Bailey Lipschultz, he covers the markets for us. Lots of economic data coming out today. We had initial jobs claims kind of spot right in line. We got, of course, the labor non-farm payrolls tomorrow, which I will miss T-Day. But you guys have fun with that. Stuart Paul, he gets paid to do this stuff. He's a U.S. economist for Bloomberg Economics. He gets a PhD in this stuff. I mean, who does that in economics? But anyway, Stuart did it. He's a good guy. Stuart, what are you thinking about this labor environment here? What are we going to see tomorrow? And kind of how are you guys thinking about this labor market out there?
We're a little bit more pessimistic than most. We're expecting 150,000 jobs added. That's our estimate for the
And again, the
November print.
consensus is 186.
185-ish.
185, right. Yep. Okay.
Yep. So we're also expecting to see an uptick in unemployment from 3.9% to 4%. Most people are expecting it to hold steady with even some downside risk. But even if it does fall, the unemployment rate, it's probably because of an increase in labor force participation.
Okay.
Not necessarily even the labor force participation rate itself, but just people returning to the labor force. Remember, there were several 100,000 people who dropped out of the labor force, surprisingly, last month. Typically, even as the economy slows down, even as hiring slows down, labor force continues growing growing about 1% per year. So that's going to continue putting upward pressure on the unemployment rate, and we're expecting the unemployment rate to end 2024 near 5%, again, making us far more pessimistic than most.
Really?
Yeah.
And you guys are still in a recession camp, right?
We are.
Jeez, that's why I like hanging out with these guys.
I know.
I
mean,
know. I'm a party pooper, a total Debbie Downer.
I was on here yesterday in the Business Week show, and Tim Stenovic has a new name for me. Molly Soft Landing Smith.
There you go.
So I'm sticking by it, but Stu is not in the soft landing camp. Tell us why not.
So we could go through some of the major factors that everybody's been paying attention to, so we'll just brush through them very quickly. People have totally run down their excess savings. The cost of borrowing is extraordinarily high. Fixed investment is obviously dragging on growth already. Looking even just at Q4 data so far, inventories are about to be a major drag. Thinking back to Q3, inventories accounted for nearly a third of the growth that we saw, right? So we're removing some of the major factors that have been propelling us to this point. And when we consider the fact that wage growth is slowing, the pace of hiring is slowing, and the primary factor supporting people's spending, their labor income, is starting to slow down dramatically, why would we expect just robust growth to continue? You have to expect a notable slowdown.
But we've been waiting for this notable slowdown for a while. It hasn't happened yet.
Yes, transmission of monetary policy acts with long and variable lags.
Sorry, Jay isn't speaking till next week.
I know. I'm giving you his talking points early.
Okay.
But go ahead, Paul.
No,
Sorry.
so do you guys think this, I guess describe how you think this recession will look for this economy.
So we think that we're basically just dipping the toe. The U.S. economy is dipping its toe in recessionary waters basically as we speak.
Okay.
One thing to think about is that unemployment basically gaps up, right? Unemployment has started inching up, but it's not the case that unemployment just slowly and steadily inches up forever. That's sort of what the Fed has marked, but it knows better. It knows that you get to the point where monetary policy is all of a sudden too restrictive, liquidity has dissipated, and unemployment gaps up as firms really rein in production and hiring plans, blow up. And that is sort of what we expect. We expect a more convex shape in the unemployment rate, especially in 2024.
So what the Fed wants to see in order to get the labor market to cool and bring in inflation with that whole thing is the idea that they would ideally love to see the labor market soften by fewer job openings rather than a ton of unemployment like you guys have in your forecast. And it seems like that is so far happening, right? You know, we saw job openings come down pretty notably in the JOLTS report earlier this week. Granted, that's for October, so kind of old news right now. And the unemployment rate is slowly ticking up, but to get to 5%, that's over a full percentage point from where we are now.
Right.
That's like millions of people losing their jobs in the span of the next several months.
It's typically about 50-50, right? It's about 50% of the increase in the unemployment rate during a normal recessionary environment comes from people losing their jobs, but 50% of the increase in the unemployment rate comes from just the labor force continuing to grow, right? So yes, you see job openings declining, you see that excess demand for labor dissipating. So far, it has been sort of an immaculate loosening of the labor market so far.
Thought we use that word with immaculate disinflation, right? Hasn't that been the tagline?
As we head into the holiday season, we could call everything immaculate, right?
All right, so at the University of Michigan, they have some good football players there, but they also have some good economists. And we're going to get some University of Michigan data tomorrow in terms of expectations, inflation outlook. How do real economists like you, who actually gets a PhD in this stuff, how do you guys think about the UMich data?
Fade it a little bit.
Okay.
Right? Fade the UMich data a little bit because so much of it is driven by gasoline prices.
Which are coming down.
Which are coming down.
Yet inflation expectations are going up.
So that's the thing, is you see these long-run historical relationships breaking down and you go, well, are we going to rely more so on the survey data or are we going to rely more so on printed inflation? And if we're relying more so on printed inflation, then it sort of corroborates the models that we use, which are people tend to act based on the inflation that they are experiencing in a broad sense. And when that's the case, they craft their spending plans accordingly, right? So if you see inflation coming down, they have no reason to really slam on the gas in anticipation of future price hikes. Right. They see inflation, they experience inflation coming down, they can slow their spending a little bit, which again contributes to a little bit of an economic slowdown.
I gotta say, any of these measures of consumer inflation expectations, I can't help but kind of roll my eyes. Like, are they literally picking people off the sidewalk and asking, where do you see inflation at the next 1 year, the next 5 to 10? I mean, ask me. I write about the economy every day. I have no idea. Seriously, I would love to know how this information is actually gathered.
Yeah, there's some...
They're not running models like you are.
It's interesting.
The consumers, that is. They're not.
Right. So you see some interesting survey data out there right now which compares, how do you think do you view the economy as economic activity as favorable or unfavorable? And they asked people in August of 2020, and they're now asking people today, despite the fact that we were, obviously no longer locked down, the COVID pandemic isn't raging anymore, unemployment is not at, century highs, people are still saying that economic activity is worse off today than it was previously, right? Coming off of a really hot Q3, right? So yeah, consumers can be fickle, they can be a bit mercurial in their survey answers. So how do us eggheads think about survey data? Fade it.
How good of a skier are you?
I'm good. I mean,
are you expert? Do you ski black, double black?
Like not to be a jerk about it, but top 0.5% probably.
Nice.
Wow. I mean, junior.
Are your forecasts that good?
Oh, not even close. Not even close.
All mountain ski patroller at Wyndham Mountain Resort.
That's right, for about 15 years now.
Really?
Yeah. Junior ski racing circuit before that.
Basically anywhere you go because you're on the ski patrol.
That's right. Yeah.
What was the worst ski accident you ever attended to?
I've seen, I'm going to knock on wood here, right? But I've seen everything but a death on the slopes.
Okay. All right, let's keep it that way.
Yeah.
All right, Stuart, thanks so much for joining us. Really appreciate it. As always, Stuart Paul is a U.S. economist for Bloomberg Economics. The Bloomberg Economics team, they're consistent. They've been, I would say, conservative / bearish / they're talking about recession, talking about slowing growth.
And I'm here for the dose of optimism.
There for the dose of optimism. So we get both ends of the argument here. We're going to have more coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Good morning. Shares of Dollar General, they've been fluctuating this morning after better than expected third quarter results. Bloomberg's Abigail Doolittle has the breakdown.
Same-store sales, they fell 1.3% versus the estimate of a 2.1% decline. They also beat earnings estimates by about 7% to put up $1.27 in adjusted earnings on about $9.7 billion in revenue. They backed, importantly, the guidance for the full year. This company's really been struggling. The CEO highlighted significant headwinds that they have made relative to inventory shrink.
Now, going into this report, shares were down. Right now, they're up just a fraction. And GameStop's disappointing results, they're pushing shares lower this morning. Sales came in at just under $1.1 billion, below estimates. We get more from Bloomberg's Alexandra Semenova.
GameStop missed in sales on all three major categories, that's software, hardware, and collectibles. Now, analysts said that this report was mixed, although they flagged revenues that missed estimates. They did highlight costs as a positive. Baird Equity Research said that the company is right-sizing its stores and headcount. Jefferies pointed to notable cost discipline.
And GameStop has closed more than 1,000 stores in recent years. Shares right now, they're down about 0.2%. Turning to the airlines, yesterday we heard positive news from Delta. Today, JetBlue. Shares are higher. They're up right now 13% after the carrier raised its guidance for the fourth quarter and full year. It said travel demands remain, quote, healthy as close-in bookings have outperformed expectations for both holiday peak and non-holiday travel periods since late October. JetBlue also said it expects to lower fuel costs for the full year. Those are the company stories we're following. I'm Lisa Mateo.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Just say AI, the NASDAQ 100 outperforming as Alphabet jumps around 5%. This is a day after Google released Gemini. That's its artificial intelligence model. Still, traders were refraining from committing to real strong positions ahead of tomorrow's jobs report. That's going to be key in shaping the outlook for Federal Reserve bets. S&P 500 right now up 32 points. That's a rise of 0.7%. We're at 4581. The Dow Jones Industrial Average is up 47 points, a rise of 0.1%. NASDAQ 100, 180 points higher. That's a rise of 1.1%. And as you look at yields right now, the 10-year is up 4 basis points. We're at 415. That yield is higher. Speculation that maybe bets on rate cuts by the central banks have gone a little too far. Also, still looking at the hawkish signals from the Bank of Japan. That has rattled some of the global markets today. The yen up close to 2% against the U.S. dollar. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash for listeners in the New York, New Jersey area. It is snow. They're flurries.
Allegedly.
Yeah,
No, you can't see that coming
No.
down in the courtyard.
No,
No.
we do not. Molly,
You
and
have
I
to
do not.
stare at it a little bit.
You've got
like
2-1 beat here, John.
It's snow. Those are snowflakes coming down.
All right,
That's
very
my
good.
weather
You heard it here
report.
first. John Tucker, thank you so much. We appreciate it. Molly Smith, Paul Sweeney live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube as well. We've been talking about SpaceX today, primarily about this potential tender offer that might value the company in $175 billion. We touched on that earlier with Ed Ludlow, Bloomberg News out in San Francisco. I want to talk about the actual rocket stuff that SpaceX is doing.
Fun stuff.
SpaceX Starship sets the pace in race to build larger rockets. Elon Musk's latest rocket, the most powerful ever built, would offer better economics than conventional crafts. We'll get into the nuts and bolts, the space stuff here, and we do that with Lauren Grush. She's actually a space reporter. You got to get that on your business card.
Coolest job.
Coolest job. Hey, Lauren, thanks so much for joining us here. Talk to us about the actual rocket stuff that Elon Musk is sending up. Talk to us about these new rockets here.
Oh, can you hear us, Lauren?
Lauren. I guess she's up in space, or might have lost Lauren.
Oh, she might be up in space.
She might be up in space. But
yeah.
I'm looking at this story here. For a few glorious minutes on November 18th, SpaceX gargantuan Starship rocket blasted toward the heavens with apparent perfection. Then roughly 8 minutes into the flight, it inexplicably exploded high above the Gulf of Mexico.
Yeah, and in true Elon fashion, not a true setback. This is just a hiccup. To be expected. A rocket might implode. Or explode.
It could.
En route to space, and then we'll get him next time.
Fortunately, nobody was on it. Lauren Grush, she's a space reporter. We've got her now. Lauren, talk to us about some of the rockets that Elon Musk and the SpaceX folks are sending up into space these days.
Well, really, it's just the one rocket that they're sending up into space. It's the Falcon 9, their workhorse rocket. And what I touched on in our article is that it's really kind of the go-to rocket at the moment. A lot of analysts have been sounding the alarm about there being a monopoly by SpaceX on the launch market right now, just because other rockets have been taken offline, or other rockets that were supposed to be ready have suffered from delays. So at the moment, the Falcon 9 is really the only working rocket, mostly for customers of its size. But SpaceX is also famously working on its Starship rocket, which has had a couple of launches so far, but it's not ready to take satellites to orbit yet, but everyone's kind of bracing for when that day will come.
Yeah, Lauren, tell us about the competition in this market. Like, surely there've got to be other players out here who are making rockets, admittedly not as successfully as SpaceX, but SpaceX is still a relatively new company, right? I mean, we're still calling it a startup. Like, there's got to be other ones out there.
I was reading today the term startup being used for SpaceX, but it is such a wild thing to say for the company because it is such a backbone for our space program. I mean, SpaceX is one of, if not the biggest partner for NASA right now. The company is responsible for taking astronauts to and from the International Space Station, and Boeing is trying to do that as well, but they're not there yet. So yeah, it's to call SpaceX a startup sounds counterintuitive, but I do understand, they're still private. But yes,
especially with that valuation, it's apparently like worth about as much as like what AT&T is worth. I mean, that's just crazy, these numbers. So how long has the company been around now? You think it's time to retire that startup word?
It has been about 2 decades. So I don't consider it a startup personally, but like I said, they are still private, so I do understand that impulse. But yeah, I mean, it doesn't surprise me that their valuation is so high because of all the things I listed. They are pretty much holding up the entire U.S. commercial launch industry right now. And like I said, that NASA relies on them quite heavily for many of its space programs and for its deep space ambitions, such as sending astronauts to the moon this decade. So, it is a high valuation, but like I said, it does seem warranted.
So, Lauren, where are we with this Starship rocket? Because I'm reading your reporting here. It says it could, send up, potentially, huge amount of cargo, 331,000 pounds. Where are we in the development of that? Because that seems like it would be a pretty big breakthrough.
Right. So just recently, they had their second test flight of Starship, where they tried to send it to near orbit, and it did get pretty far, especially compared to their first test flight of the vehicle, which cleared the pad but started spinning out of control, and then SpaceX had to blow up the rocket. This time, the launch cleared the pad. All of its engines were working properly, and it did break apart as planned, a process known as stage separation. That didn't happen the first time, but Starship did blow up when it was embarking out over the Gulf of Mexico. It did make it to space, but didn't reach those near orbital speeds as planned. So, but for SpaceX, that's just how they test, right? They weren't necessarily expecting a perfect launch. They just like to launch, see if they can get farther than they did before, and then use those lessons learned when they go on to the next flight. So for them, it was a victory because they had improved upon the first flight. So, but still, it's going to be a minute before they're ready to actually take those satellites to orbit, like I mentioned.
Yeah, you also mentioned, Lauren, so this is, SpaceX being a huge partner to NASA here and getting up to the International Space Station. But do you ever see this could be a rocket ship that like a regular consumer could go on?
Well, yeah, that's the plan. So obviously, the things that get headlines are all of the big ambitions that SpaceX has for Starship. So sending people to the moon and Mars and things, or, sending tourists on deep space missions around the moon. But the truth is, SpaceX does have plans for it as simply an orbital rocket. I mean, one of the big things that they're going to use Starship for is to launch their bigger next generation Starlink satellites. But the idea is also that it could be a vehicle for other customer satellites. So, Elon has talked about eventually just using Starship as a replacement for the Falcon 9 and having it be the go-to rocket for SpaceX. We'll see if that actually happens, but there is plans beyond just making it a deep space vehicle. They would hopefully make it, an orbital vehicle as well. Whether or not customers will want that vehicle, whether or not it'll be as cheap and flying as rapidly as SpaceX says, those are all variables that remain to be seen. But given the promises that SpaceX has made, it could be a bit of a game changer for the launch market. But like I said, we have to get there to see.
Where is and what is Boca Chica?
Boca Chica is a town on the southern tip of Texas. I've been there a few times. It's where Starship is being built at SpaceX's Starbase facility. It's a great location for a company like SpaceX because it's right on the water. It's closer to the equator, which is helpful when you're launching rockets in terms of getting the right speed you need to get to orbit. It's definitely become a bit of a go-to destination for SpaceX enthusiasts because you can.
How does one get to Boca Chica?
Building the rocket right there in front of you.
Let's say I'm coming from New York. How do I get to Boca Chica?
Well, you fly into either Dallas or Houston, and then you can either drive or take a small plane down to Brownsville and then drive.
Sounds like you could maybe expense that.
I could expense that. I've got the new corporate card.
And just tell us, Lauren, as well, what are like the big space goals right now? I mean, we've already, put people on the moon. We've got, a few rovers that have been to Mars. Like, what are like the big targets out there right now?
Sure. Well, just to touch on, part of the article we were discussing too, one of the big goals right now is to kind of break up SpaceX's dominance in the launch market right now. So a lot of companies, launch startups, are either pivoting away from small launchers and building larger rockets to compete with the Falcon 9. Other companies have been trying to develop their Falcon 9 competitors for a while, but have suffered from delays. So there's a hope that maybe that kind of vehicle will capture a good chunk of the launch market that SpaceX isn't servicing right now. And then, there's all the really exciting stuff that NASA is working on with its commercial partners. NASA has its Artemis mission to the moon, which is hoping to send humans back to the lunar surface for the first time in nearly or more than half a century. And SpaceX is a part of that. Jeff Bezos' Blue Origin is a part of that as well. So it's a very exciting time. And then you've got all these other industries that are starting up as well, commercial habitats and low Earth orbit, satellite servicing, being able to fix satellites while they're in orbit already. There's a lot going on, and with launch
Fortunately-
prices coming down, hopefully they can be achieved.
And fortunately, we have a space reporter, Lauren Grush. She's our space reporter, Bloomberg News. She's based down in Texas. Great place to be. With our news in New York City, here's Michael Barr.
Thank you kindly. 4 Republican presidential candidates debated last night. On News Nation, Nikki Haley says the attack on Israel is a proxy fight against Iran and Russia.
There is no one happier right now than Putin because all of the attention America had on Ukraine suddenly went to Israel. And that's what they were hoping is going to happen.
Former New Jersey Governor Chris Christie challenged Florida Governor Ron DeSantis to say if he believes Donald Trump is fit or unfit to be president again.
The fact of the matter is, he is unfit to be president, and there is no bigger issue in this race, Megyn, than Donald Trump, and those numbers prove it.
Entrepreneur Vivek Ramaswamy said he'd support Trump even if he were convicted. Meanwhile, former President Trump was again absent from the stage. Right now, he is in a New York courtroom in his fraud trial. President Biden's $106 billion aid request for Israel and Ukraine is stalled on Capitol Hill in a fight with Republicans over border security. It's raising new questions about Washington's commitment to the fight against Russia for the long haul. Bloomberg Government's Jack Fitzpatrick is in Washington.
There's a lot of urgency. The White House has been expressing a lot of urgency. They sent a letter a few days ago saying this absolutely needs to happen by the end of the calendar year. There are some Republicans involved in the negotiations that say that the White House has not been specific on why and on what happens if the negotiations don't succeed by the end of the year.
Bloomberg's Jack Fitzpatrick reports the president is accusing Republicans of playing chicken with our national security. The latest mass shooting in America, at least 3 people killed when a gunman opened fire on the campus of the University of Nevada, Las Vegas yesterday afternoon. The alleged gunman who was killed said to be a professor. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. You have 10 of the 11 major industry groups in the S&P 500. They are higher right now. Communication services, that's the group that's in the lead, and that's the home to Google parent Alphabet, getting a pop right now, about 5.4%. It's releasing its AI model Gemini, and everybody's on board with that, it seems. Meantime, Kathy Jones at Charles Schwab reminds investors, you know what? Fixed income is offering some pretty attractive returns as well.
Some sort of mix of higher credit quality corporate bonds and treasuries, government bonds, MBS, et cetera. You're locking in yields in the 5 to 6% range. And if you are a municipal bond investor in the highest tax bracket, you could be looking at 6 to 7% tax equivalent yields.
And right now, the S&P 500, 31 points higher. That's up 0.7%. We're at 4580. The Dow Jones Industrial Average up 28 points. The NASDAQ 100 right now 182 points higher. That is up 1.2%. And traders, of course, awaiting tomorrow's jobs report. Economists forecast a moderate gain in the payrolls. About 186,000, I think, is the consensus right now. Bloomberg Economics sees the U.S. unemployment rate climbing next year, approaching 5% by year end. And let me just finally wrap up with JetBlue. Never been on a JetBlue aircraft, but shares right now 14% higher. They're lifting their 2023 outlook. Strong year-end bookings, so they say.
A takeoff, perhaps.
Yes. Oh, yes. Shares are sky high, Molly.
Soaring.
So we've kind of established it's an eyesight problem with Molly.
Oh, no,
those
that's
are
not
snowflakes out there.
I don't know. Paul, what do you see?
I don't see it. I
don't see it.
You too.
Yes.
Superman.
But I did get a report
apparently.
from a listener in Summit, New Jersey, that it is in fact snowing out there in the burbs.
All right, there we go. Okay. And we check the markets for you all day long, and even do the weather report all day long, right here on Bloomberg Radio. Molly and Paul.
Very good. John Tucker, Molly Smith, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. So head over to youtube.com and search Bloomberg Radio. Let's get a little quant here. Why not? What are the black box people doing? Are they using AI in these black boxes, which I don't trust anyway? But our next guest, he gets a PhD in physics. So what does he do? He goes into financial services. Why not?
George Patterson. Been a space reporter like our last guest.
I know, he could be a space reporter. George Patterson, he's the CIO of PGIM Quantitative Solutions. He did begin his career as a rocket scientist, so he didn't let all that education go to waste. George, thanks so much for joining us here. Quantitative Solutions, or I guess the question is, are you using AI in your black box in your day-to-day?
So, first of all, thanks for the opportunity to speak. Appreciate being here. We do use elements of what I would say is machine learning, and it's primarily in language models. There is a huge amount of textual data, and language models really allow you to get in and extract a lot of information from text data. That's really where we see the current, the kind of best bang for your buck.
So tell us an example of that. Is this like going through corporate transcripts and just seeing like what the robot makes of it?
Well, so the challenge, yes. So for example, that is one particular application. So it could be an earnings conference call. It could be an analyst report. It could be a press release from the company. And, the early applications of this technology would look at just good words versus bad words. Are there more positive words? Are there, more negative words? Now you're able to kind of really extract much more meaning and perspective and go much deeper into the language to really get information. Now, the challenge with all of these models, as you said, is that they're not always transparent. At PGIM Quantitative Solutions, we're always looking to use it in such a way that we maintain a line of sight so that we can understand what the fundamentals are being captured by a particular model or a particular algorithm.
George, talk to us just broadly about PGIM Quantitative Solutions. How do you guys approach the market? Kind of where do you think you add value? Where's your focus?
Well, so there's really two main lines of business. We run a quantitative equity book of business, which is very broad, goes all the way from S&P 500 down to micro caps, goes developed markets to emerging markets, and we also address a number of multi-asset portfolios, primarily through asset allocation, but also some kind of global macro strategies. We're really about taking investment principles that really are the same principles that many fundamental investors would use, but we apply them in a systematic manner. And our goal is to really do that in a very efficient manner. We're able to do research to understand which ideas work, which ideas don't. But at the end of the day, when you get a portfolio, what's important is that portfolio has to make sense. It has to look like a portfolio that is consistent with long-term investment beliefs. And we know we're very careful about making sure that any risk we take is going to get compensated. And I'd say that's really our secret sauce. It's in many ways, we're a systematic application of fundamental investment insights.
So obviously the robots aren't doing all of the work, or people like you, George, wouldn't have a job. So tell us then where the humans come in and what kind of decisions you guys are making. Are you sometimes overriding what the machine is telling you to do?
No, mostly what the humans are really doing is research and oversight. So for example, we don't have a robot or an AI program that builds the model. You still need people to actually build the models and do the research and do historical research. We do use tools, whether you want to call them robots or machine learning, to basically access more data, to scrape data, whether it's scraping from the web or scraping from a document, or even like text, even listening to audio and trying to ferret out sentiment. However, at the end of the day, the insights that come from that need to be analyzed, and we have people who actually sit down, do research, and build the models. And what's really important is all of this is trying to understand what is it that you're capturing, and is this something that's just like a short-term statistical bump, or is it something that we think is really coupled to long-term investment insights? Because that's where we think institutional investors, all investors really, are just best rewarded or benefited from something. You don't want a black box, because the problem with a black box is that someday it's going to stop working. And when you have no transparency into how your process is working, and then it stops working someday, then what choices do you have? You just have to unplug it. And where do you go from there?
All right. So how are you guys approaching the markets these days? Where do you see the opportunity? Where do you see the risk reward?
So great question. This year has really been, the party has been in U.S. large cap growth. And, those names have rallied definitely the first 6 months of the year. Since then, we've definitely seen the market broaden out, where we're seeing more segments participate. But at the end of the day, U.S. growth is still relatively expensive. And the type of growth that has really outperformed has been big, large companies. And the challenge there is that when you're that big, it's just hard to continue to grow at that pace for a long period of time. So we tend to be focusing more on some of the contrarian plays in the U.S., value stocks that have really been ignored. There's a number of stocks that have just, really had lackluster returns year to date. But then also outside the U.S., mostly in emerging markets. But even in emerging markets, you really need an active perspective. So, we're definitely looking at emerging markets, trying to avoid China right now, just because a number of the headwinds that are going on with regards to property investment crisis problems there. But, really looking at EM, particularly EM ex China.
George, thanks so much for joining us. Appreciate getting a couple minutes of your time. George Patterson, CIO of PGIM Quantitative Solutions. They're an $81 billion systematic investment management firm of PGIM. That's Prudential's, Prudential Insurance. Prudential's, they have $1.2 trillion investment management business and the 11th largest investment manager in the world, located in Newark, New Jersey. So
we love a New Jersey firm on this show.
Love it. And they have been loyal to Newark through the years, through the decades. Big anchor of the great city of Newark, New Jersey. That is Prudential Insurance Company. Talking about that. S&P 500 up 0.7%, having a little bit of a move here. We'll take that. And then NASDAQ up 1.1%. We'll have more coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Hey there, Paul. Alphabet has released Gemini, its latest and most powerful AI model. Bloomberg's Simone Foxman has the backstory.
Now, Google invented the technology behind the current AI boom, but OpenAI and its ChatGPT and DALL-E have really taken a lot of the popularity. So Google wants to get back into the game with rolling out this Gemini AI model, which is usable through the public through the chatbot Bard.
Now, there are 3 versions of the technology. Gemini Ultra, the most anticipated, but it won't be rolled out to the public until next year. Alphabet right now, they're up about 5%. And chipmaker AMD is higher after it unveiled a new AI chip. Bloomberg's Ed Ludlow says MI300X is a direct competitor to NVIDIA's H100.
It has a technological advantage in that the AMD GPU has something called HBM3, which is the latest cutting edge of high bandwidth memory. High bandwidth memory reduces latency, it makes it more power efficient. And when I was chatting with the CEO, Lisa Su, yesterday, the main point is that it's a cost competitive product.
Now, the company also gave more insight as to who will buy the GPU. Now, it's not just Microsoft Azure. Meta is going to put it into its data centers. And AMD also updated its 2027 call for the total addressable market for AI accelerators to $400 billion. AMD right now is up about nearly 7%. NVIDIA will check in with them too. They're up about 2%. And Meta Platforms is moving to make messages on Facebook and Messenger more private and secure. End-to-end encryption of personal messages will now be the default setting on social media platforms. Encryption has been an option, but users had to turn it on. I'm Lisa Mateo.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, looking at these markets here, the S&P 500 up 0.6%. NASDAQ up a little over 1% there, so that's interesting. Yields a little bit higher today. 10-year Treasury 4.14%, but we are a long way from 5% where we were back in late October. WTI crude oil slightly higher, still under $70 per barrel. And gold higher yet again, $2,030 an ounce for gold. With our news, I guess we're going down to Washington, D.C. I'll go to Michael Barr in New York. It's even better.
Thank you very much, Paul. Molly. Former President Trump is in a New York City courtroom again for his fraud trial. Trump took a swipe at the judge overseeing the case.
He ruled against me before the case even started. The case hadn't started. He knew nothing, and he ruled against me.
Trump also called Attorney General Letitia James a lunatic. It got a bit spirited in last night's debate among the four Republican presidential candidates on stage. Former U.S. Ambassador Nikki Haley was a target of attacks from Florida Governor Ron DeSantis and entrepreneur Vivek Ramaswamy, who was booed by the audience for calling her a fascist threat.
The only person more fascist than the Biden regime now is Nikki Haley, who thinks the government should identify every one of those individuals.
Former President Donald Trump skipped the News Nation debate. Bloomberg government's Jack Fitzpatrick reports time is ticking toward the Iowa caucuses in less than 6 weeks.
There's not currently a very strong Trump alternative. If you are waiting on anyone else to drop out of the race, it could be a valuable thing, what you're seeing in Haley's surge in the polls to try to consolidate more of their support. But right now, it is still close between her and Ron DeSantis. DeSantis still appears to have a slight edge in a lot of recent polls.
Bloomberg's Jack Fitzpatrick. Meanwhile, a Wall Street Journal poll this morning has Haley moving into a virtual tie with DeSantis for second place. Israeli forces have intensified their campaign into Gaza, now in the south, and say they are looking for the leader of Hamas. Fighting is ramped up in southern Gaza's largest city, but hundreds of thousands of civilians are trying to find safety. Working the night shift is likely throwing off your sleep, and a new survey reveals just how much. Researchers in the Netherlands looked at more than 37,000 participants and found about half slept less than 6 hours a night, and about a quarter reported having 2 or more sleep disorders. The research
they needed a survey for this?
Yeah, I know. They just needed to come to us. We could have told them that. The research also shows people aged 30 and below are more likely to report disrupted sleep. They didn't ask us. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Back to Paul and Molly.
Michael Barr. We got Michael Barr, John Tucker coming in here like crack of 2 a.m., 3 a.m.
No, Michael's here when I get here, and I get here really, really early. And he comes from like Ohio.
Exactly, comes from Eastern Ohio.
The roaches are asleep when I track them in here.
There you go. All right, Michael Barr, thank you so much. We appreciate it. Hey, folks, check out the cover of Bloomberg Business Week. There's a great story on Salesforce.com. This is a company just so successful, just grew like crazy. And when companies in Silicon Valley, are in growth mode, it's not just engineers they're hiring. They're hiring salespeople because the salespeople got to sell this stuff. And the salespeople can make a lot of money. There's a story here. This guy, a couple years out of college, is making $400,000 in 2022. That's the good news. The bad news is when these companies tend to retrench, which we saw with Facebook last year, cutting some costs. Salespeople are the ones, and the marketing people are the ones that feel the brunt as well.
Yeah, I mean, this headline, if this is anything just to say for why you might want to read the story, it's called Era of $800 Dinners and Luxury Car Bonuses is over at Salesforce. So that famously employee-friendly company run by Mark Benioff becoming more Darwinian and providing a new model for Silicon Valley. So read that in this week's edition of Business Week.
Yeah, I'm looking at the company here, the stock. The stock is up 87% this year. It's got a market cap of $240 billion. So hopefully those salespeople were paid in some stock and they made out on their stock holdings. So nice move there. Check it out on Bloomberg Business Week. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we got some smart people. We're going to have to be on our toes, Molly. John Author, senior editor with Bloomberg Opinion. He's going to join us to discuss his recent column on Fed risk and companies going broke. That should be fun. Retail Outlook, we're going to check in with Angie Solanki, National U.S. Director of Retail at Colliers, to talk about the consumer health and the retail outlook as we go into the holiday season. And then it is Thursday. That means we talk with Barry Ritholtz. We have no idea where we're going to talk with Barry till the little red light goes on and we bring him on. So we'll see how that goes. Some days good, some days not so good, but he's always a great read. John Tucker's going to lead us off, however. He's got a Bloomberg Business Flash.
All right, guys, after 3 days of losses for the Dow, the S&P 500, the major averages, they are higher right now, and technology is in the lead. Google's AI product lifting tech sentiment. Google parent Alphabet shares, they are up right now over 5%, 5.2% to be exact. Traders also betting that Friday's jobs report could offer more support for Fed rate cuts as early as the first quarter. Meantime, oil prices may be heading lower. Paul Sankey of Sankey Research telling Bloomberg earlier today Saudi Arabia may try to clear the market and punish OPEC Plus members who are cheating on their production quotas.
Saudi said they'll push through Q1 with cuts, but by the time you get to Q2, and if demand isn't strong enough seasonally, you could see Saudi dump the market and try and make everyone honest again.
Right now, the S&P 500 up 32 points. That's a rise of 0.7% at 4581. The Dow Jones Industrial Average up 49 points right now. The NASDAQ 100 up 184 points. That is a rise of 1.2%. Some of the individual shares on the move. GameStop, shares. Earlier, they were down close to 9%. Right now, they've turned around. Those shares are up 3%. They did report third quarter net sales that missed estimates, and my own personal GameStop analyst tells me there's no reason for this retailer to exist.
Really? Because it's
the
all...
gamer in my house, he's like, why wouldn't you just go online? And it's just like, yeah. So anyway, that's his opinion. It's just an opinion.
Yep.
We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Molly and Paul.
All right, John Tucker, thank you so much. We appreciate that. John Tucker with the Bloomberg Business Flash. Molly Smith, Paul Sweeney live here at our Bloomberg Interactive Broker Studio, streaming live on YouTube. So head over to youtube.com and check us out. Search Bloomberg Radio. That'll get you where you need to go. I'm looking at the stocks. As John just reporting a little bit of green on the screen here. The S&P 500 up 0.7%, pretty much at its intraday high, so we'll take that. Let's see where the action is under the hood. We go to Nora Melinda. She covers all the equities for Bloomberg News. She joins us here in our Bloomberg Interactive Broker Studio. Nora, what are you looking at?
Well, Alphabet is rallying this morning after launching its latest tech development called Gemini. It said that it's the largest and most capable AI model the company has ever built. And as we know, while Google has invented the tech that underpins a lot of the AI boom, its products really do generally lag in popularity. So through Gemini, the company is hoping to change that. Google did stress that Gemini is the most flexible model that it's made because it comes in different sizes, including a version that can run directly on smartphones.
All right. So, I mean, I think if with all the money Google has, they're going to be a player. That's just the way I think about it. I mean,
I would just love to know, with all of this AI stuff, for me being what I would venture is maybe the least tech sophisticated person in the room. What is
right there
it?
with you.
Like, is this something that I'm going to put on my phone? Is this another Chat GPT? Like, what is it?
Large language learning.
Right there. I mean, there's multiple layers to it, but I mean, the main competitor, as you mentioned, like it is Chat GPT. So the question is, can Alphabet really be a player in this space? And as you mentioned, it's such a massive company with so much capital. So many would say yes.
You know, the most recent use of Chat GPT that came up for me, I'm just to update our listeners on the apartment buying journey.
Oh, yes.
That I am getting very close to signing a contract and have needed a few letters of recommendation for the co-op.
Good luck.
And I asked my good friends, and one of them said that she had asked ChatGPT to write it.
And it's been one for you.
And I said to her, I was like, I certainly hope there is some human element in that, and that this robot didn't write my letter.
Got to read over it, right?
Exactly.
But keeping in the tech space, looking at AMD, the chip maker unveiled its new accelerator chips that are aimed at taking on the AI market that's dominated by its peer, NVIDIA. AMD does claim that its product should be able to run AI software faster than any of its competitors. I don't know. Can it do just that? We don't know. But investors are cheering on the new product, with AMD shares up more than 6% today.
How about what's going on in the pizza business? This is something I can understand.
This is related.
This is more my bailiwick.
Yeah,
that's up my alley.
You can keep the AI out. Just give me pizza.
So, Domino's Pizza, this is a fun one. I know we're in New York and we have so many other places that we could eat, but Domino's Pizza is at its highest intraday level since August of 2022. It's having an investor day today, and it said that it's forecasting long-term 2024 to 2028 annual operating growth of more than 8%. So that small detail is really making that stock higher this morning, up more than 5 or as much as 5.9% today.
Wait, McDonald's had their investor day yesterday.
Mm-hmm.
Domino's today. So if you're
this must be a sick event to
you're
attend.
Yeah, if you're a restaurant analyst, I mean, you're busy this week. I mean,
this is the week.
All right, so Domino's is up actually. So is that what you're telling me?
Yes, it's up as much as 5.9%
This
this
stock
morning.
is $400. Unbelievable.
Who would have thought?
How much pizza can you get for $400?
Market cap of $14 billion. There was a time when my oldest son, I think when the app just came out, so he's 27, so this is probably 10, 15 years ago. So the app was just kind of coming out. He thought he was on the cutting edge, and he kept having Domino's delivered to our home. And we lived in New Jersey where we have real pizza. It was embarrassing.
It is embarrassing.
I mean,
yes.
You know, it's just ridiculous.
I mean,
so.
what's the thing that this is again? I can't claim to be a true pizza connoisseur if I don't know the answer to this. But what is Domino's the one that's famous for the cheesy crust, or is that Pizza Hut?
I don't know. Who cares?
I don't know. I mean, they're selling 8% growth here. That could be it.
I know.
This could be where.
But
the
I tell you, when I
money's
lived in Durham, North Carolina, Domino's was a lifesaver. I mean, it was
in that market.
I mean, it's there.
It's there.
You got that or Papa John's.
Yeah, so, you know, they delivered to the dorm, so it was good stuff. All right, Nora, thanks so much for that, Nora Melinda. She covers all the equities for us. All right, we got this guy, John Authors, in. He's really smart. He's British, so he sounds probably a little bit smarter than he might be. But at the end of the day, my New York Yankees got Juan Soto, John Authors.
Yes.
What did your Boston Red Sox do this offseason?
Well, you're talking about this in the past tense.
There's still...
The last I checked, there's another 3 months to go.
Okay.
We have a brilliant new GM who has the, intestines of steel necessary for his first big trade to be with the Yankees.
That is true.
Let's see where he goes. The Red Sox are not going to be competing for a championship next year. We do have quite a number of good prospects coming through. If he can make 2 or 3 deals, keeping a laser focus on getting good starting pitching, we will be fine. And those of us, because we've won 4 championships
we have won.
this century, more than anyone else.
Yep.
And we're not as entitled as certain fan bases, one could mention in this city. We can be patient. We can just enjoy progress, enjoy the excitement of the analysis that goes into building a great team, and laugh at people who waste money on people like Giancarlo Stanton.
Oh, God. Yeah.
There we go.
Yeah, there we go. All right, good comeback. Companies...
You're not going to win on that one. Carry on.
Exactly.
Soto will be very good for you.
Yeah, we're going to have fun with him. Companies are going broke gradually, not suddenly. That says John Authors. Like a U.S. recession or China's post-COVID rebound, a wave of corporate defaults was anticipated this year, but didn't happen. Yeah. That doesn't mean it won't. What are we waiting for here? Rates are going up. I mean, I got to make bond payments. I got to make interest payments.
Rates are actually beginning to go down, having been going up steadily for 2 years. And there is still no particular wave of defaults. We also had a banking crisis.
Yep.
Not a major one, but a pretty significant one in the spring, which led to very sharp tightening of bank lending standards, which has always in the past been a good leading indicator for trouble ahead for credit, it's very surprising. I think the single biggest reason we don't have significant defaults to date is that, as we all know, rates stayed too low for too long. It's part of the argument for higher for longer, that leaving them down throughout 2021, which I think everybody, including Jay Powell, now agrees was a mistake, made it much easier for people to lock in very long-term finance at low levels, which means that things are not coming to a head as quickly as they once would.
Not to mention then all the stimulus too rolled out in March 2020.
Yes, that is still there in the system. So when you look at the actual cash flows that companies are generating, you would think they would be moving towards zombie status, or of needing to contemplate default. And thanks to the fact that they still have very cheap, very unusually low debt service charges, they can get away with it. I do think I cited one chart from Jim Reed of Deutsche in that column with the average age of all the high yield bonds, all the junk bonds in circulation over time. So, if you take all the bonds out there, what is the average amount of time before they mature? And I was quite startled quite how short it was. This is by far the shortest amount of time before people have to refinance that there's ever been.
How much time?
I think the average is now down to like 5 years.
Oh, wow.
The other thing that surprised me, Europe is much more dependent on its banks, which is why why a less aggressive tightening there has had much more of a response, because the banks are much more of a critical part of the transmission mechanism. The trend is actually even sharper in Europe. Like, absolutely nobody in Europe has wanted to take on any new debt over the last couple of years. Again, exaggerating for effect, but nobody's. And the result is that there really is not much time at all if you've got a speculative loan, a speculative bond on your hands in Europe before you need to refinance it.
Let's keep it in the U.S. You're saying here that this corporate wave of defaults still could happen, but as you just said, rates are now about to go down more likely than up. Spreads are still pretty tight. I mean, triple C's has probably been the best part of the market to be in. In high yield. So where is this? Where could this wave of defaults come from?
I mean, that latter factoid sends
the
chills.
C rally?
It's true. It sends chills up and down my spine.
It doesn't get you excited to go buy some triple C bonds?
No.
Okay.
I may be over applying the lessons from covering the credit crisis, but no. That reminds me so vividly of what people were convincing themselves about
some subprime auto loans?
Yeah, about subprime auto loans, subprime mortgages. That sounds like it's certainly not as big as subprime was, but there's no way the scale of the problem is that great. But the underlying physics of what's going on are alarmingly similar. I think what we need, it ultimately comes back to the tired, overdone debate about soft versus hard landing. If you genuinely get a very soft landing in which rates can come down without there being a recession, then companies will muddle through. If you don't, then you are going to have a lot of smaller company defaults. This is another thing, incidentally. There is no problem with credit quality for the bigger companies, like absolutely none. They're about as healthy as they've ever been. It's
in high yield too.
But in high yield, we're talking serious problems that you would normally associate with a recession. If you have a wave of relatively small companies defaulting, that doesn't necessarily create severe losses for the markets, for financial markets, because they're not very big. As they tend disproportionately to employ more people, so the magnificent tech stocks per unit of market cap don't employ many people.
Right.
your average high yield lender, each time one of those goes bust, that really, the possibility that this becomes a rolling effect on the economy is very serious, is very real. And I think that is one of the best reasons why the Fed might want to take some risks on letting inflation take off again, to ease earlier than they otherwise might. That there is a possibility that credit, once it bites, will have quite a significant effect on the economy, even if it doesn't have that big an effect on the assets. In the first instance, in the assets we look at, the asset prices we look at.
So you've got a good chart in here. It's from Fathom Consulting, where you've kind of got bankruptcy candidates, companies that are bankruptcy candidates, companies that are borderline bankruptcy, and then companies that are strong/healthy. And I'll just describe it for our listeners. The trend ain't good.
No.
So is there I guess the question is, are some of those bankruptcy candidates, do we need a recession for them to be tripped into bankruptcy?
You would think you didn't. Generally, when there are more of them around, a given percentage will hit the wall, even in moderately good economic times. The big point to make about that's based on Altman scores, which is a model that's been used for some decades.
The Z-score?
Yes.
Yeah.
The issue with it is how well it deals with intangibles. Intangibles are intangible. You can't actually measure them, but that doesn't mean they don't exist. So it may overstate the issue now that certain intangible issues matter more. However, the number of companies that are truly strong credits is tiny now, basically because so many have borrowed so much at low rates. That affects the Altman Z-scores. What are they going to do when the only way to refinance will be at significantly greater interest costs? That is a very legitimate concern that does come from that chart. Even if they don't go bust, it's going to affect their business model badly.
Well, a lot of companies have taken on that debt because there hasn't been that huge of a penalty. I mean, when you look at the difference in spreads going from, single A to triple B, it's like, all right, who cares? It's like a couple basis points, so might as well.
I think it's a little bit. I wrote a column about this a couple of years ago. One of my favorite pieces of classical music is Berlioz's "The Damnation of Faust." And there's the final scene is when Faust is being taken by Mephistopheles to hell, and the beat gets tiny little drum beats early on, and it gets louder and louder and louder. And I think that's the kind of thing we're at in the credit market.
We'll go with that. John Authors, thank you so much for that literary musical reference. Senior editor, Bloomberg Opinion.
Always a pleasure.
This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. An online pet supplies retailer is feeling the pressure. Bloomberg's Gina Cervetti has more on that.
Chewy reported a drop in active customers for its latest quarter and cut its full-year net sales guidance. The pet product supplier reported an 8% sales increase for the latest quarter.
Analysts viewed those results as disappointing, with Citi describing them as, quote, lackluster. Shares of Chewy right now down nearly 2%. A fast food chain is expanding its offering, going beyond just the Big Mac and focusing on beverages. Bloomberg's Joan Doniger has that story.
McDonald's apparently likes the Starbucks model, so it'll try new small format beverage-led shops with a new name, Cosmics. They're said to look like Starbucks cafes, and they'll offer a variety of customizable drinks that are too complicated for McDonald's to do. The pilot project starts this month with a location near Chicago and 9 more coming next year in Texas.
And beverages, they're not the only thing McDonald's is tapping into. Technology is a big part of it, too. The burger chain plans to use an AI chatbot being developed by Google. Now, the bot is called Ask Pickles, and it'll be trained on everything from manuals to data generated by equipment at its restaurants. McDonald's hopes it will help boost productivity. Shares of McDonald's right now, they're up just a fraction. And sticking with AI, a union is looking to organize workers at tech companies like Google and Apple. The Communications Workers of America has already unveiled a set of principles to protect employees from AI, including guarding against surveillance, invasive surveillance, as they call it, and automated decision-making, hiring, firing, and discipline. Those are the company stories we're following this hour. I'm Lisa Mateo. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom in this Bloomberg Business Flash. NASDAQ 100 rising right now, all wells close to 0.9%. The S&P 500 halted a 3-day drop. The AI euphoria that seems to be raging on. You have shares of Google parent Alphabet lifting the other boats. It is up 5% over optimism about its artificial intelligence model. They call it Gemini. Some of the other stocks on the move. JetBlue Airways boosting the full-year financial outlook. They're citing better than expected bookings and operational performance in the fall. Its shares right now, they are up 14.4%. And then in a week jam-packed with labor market readings, data showing continuing applications for jobless benefits falling by the most since July. We got that data this morning. This comes, of course, ahead of tomorrow's all-important jobs report. S&P 500, 21 points higher, up 0.5%, 4570. The Dow is just turned negative, down 7 points right now. The NASDAQ 100 up 138 points. Again, that is a rise of about 0.9%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Molly and Paul, looks like the snowflakes have...
They've dissipated. I was going to say on your last Business Flash, I would have given a weather update that I did see the flurries, but... You know,
that was it.
I didn't say it on the record, so it didn't happen.
Exactly right. I saw them too, for what it's worth. John Tucker, thank you so much. John was early, as he always is on these things. John Tucker with our news there. Molly Smith, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube, so you can head over to youtube.com and search Bloomberg Radio. Angie Solanke joins us. We've talked to her a lot about retail. Usually it's on the phone because she zooms in from San Francisco or something. She's a National Director of Retail Services for the U.S. for Colliers, but she's in New York on our studio today.
What a treat.
How cool is that? Angie, what brings you to the Big Apple other than it being the center of the world?
Other than the snow, allegedly.
Exactly. Well, I don't mind the snow, actually. But actually, I'm here because we have our shopping center conference at Javits. So it's a great conference. It's actually held, it's ICSC, and it's held in Las Vegas, and then, of course, in New York.
So what's the future for shopping centers here? I mean, I guess when talking to people like you, for the last decade plus, it was shrinking the footprint as more and more sales went online. Where are we in that process now?
You know, it's still happening. Look, 50% of retailers are looking to expand in the next 5 years. And it is a variety of not just footprints, but also concepts. So as we look at it from an investor perspective, it's wonderful. Why? Because when you look at a shopping center and you start to look at how do I unravel it, it's like a Rubik's Cube. And you start to look at it and say, okay, it used to be great 15, 20 years ago. Well, fast forward, the consumer's looking at a different shopping pattern, a different shopping habit, and they're shopping at different times. So with that, you need new retailers, and you also need to have kind of a new, fresh, look of a project. And that could be through mixed use, or it could be pure retail.
So who's doing that well right now?
Oh my goodness, there's so many great investors out there that are focused on mixed use as well as just the overall development space. The quality of retail right now, there isn't enough supply. That's our biggest challenge.
Enough supply of?
Actual space.
Really?
Yes.
I thought we were just,
No, that's quality space.
Quality, like the Short Hills Mall across the street from my house.
Tier A malls.
Yes, Tier A malls, shopping center, lifestyle centers. There's just a lack of supply because occupancy is anywhere from around 98% on the average.
All right, so it sounds like the industry's rationalized its space, which has been a long-term project. Okay, so that's one part of it. Now, I was gallivanting through Midtown yesterday afternoon and evening, and the shoppers were out in scale. I mean, in
Did they have bags? They were actually buying things?
Yes.
I always look for that.
Fifth Avenue, I went to see the tree, which looks awesome at Rocky Center. They did a great job this year. Packed Fifth Avenue, Madison Avenue. Talk to us about holiday shopping. What are we seeing so far this season?
I agree. I mean, the streets were full. I went out, did some secret shopping, and people were in great spirits. Very positive vibe. It was true. I definitely did see some shopping bags, but I also saw people going in to experience and see what else is in the store. So it was a lot of window shopping. And I say that because if we stop and look at our numbers, so for Cyber Monday alone, one day, sales were up compared to last year by $1 billion. So there is spend
Inflation
happening.
adjusted?
Even with not inflation adjusted,
Okay,
but I
just
don't think
nominal dollars.
exactly. But I don't think it's going to be a significant inflation component to it. And I say that because people are starting to still get used to, okay, prices are gone up, have gone up. But when you compare a product purchase versus call it a service or travel purchase, because I do differentiate those, here I am, I'm in New York and I'm like, oh my goodness, hotel rates? Wow.
Yeah, we have our own ecosystem of inflation on this island.
Exactly. So, so people are going to pick and choose in terms of where they want to spend.
Got it. And, it's something that I've been looking at from the economy perspective, too. We get this report out from Challenger, Gray, and Christmas. They're an executive coaching and hiring firm. And they've been coming out with these seasonal hiring numbers. And it's been really, really weak so far. Like, just not seeing nearly as many staffers at some of these retailers in this season. I think right now it's at like the lowest level since 2013 for where you'd expect to be at this point in the calendar year. So it doesn't seem like there's a whole lot of time to rectify that. I mean, but it sounds like things are still chugging along anyways.
Yeah, as I kind of, use this phrase a little bit, Blur Friday. So because everything got pulled forward in terms of promotions and deals, et cetera, you're starting to see people shop kind of over across a longer period of time. So people have to adjust for that staffing. But in addition to that, I think with, the whole omni-channel or different channels of purchase, people are having things delivered, people are having, they're going to the store to pick things up. So that is adjusting the staffing. And I think retailers have become quite sophisticated as to how many people they need and at what time.
If I actually find myself in a store this season, which is debatable, or if I click on something, am I going to get it? Is the stuff on the shelves? Is the supply chain fixed? How are the stores dealing with that this season?
I think this season is definitely far better. Okay. It's definitely eased, so I don't think it's going to be that much of an issue, although I did have something get stuck in New Jersey about 30 minutes away. I was like, where is it? This was ordered a week ago. But nonetheless, it was, I think that's not going to be an issue whatsoever.
Something we also look at for just the outlook on the economy is this discretionary spending. And of course, this is the time of year that you're going to see more of it. So does it, do you think then there's a reason to say that, this year it's so much stronger, that the economy is then doing that much better, or you kind of have to mute that seasonal factor a bit?
Yeah, I would definitely mute the seasonal factor, because what we've seen actually, the reason why we saw some of the rise in sales and spend was the heavy discounting and promotions. Okay. So the marketing from some of these retailers is fantastic. I don't know about you guys, but I received from a certain brand multiple emails like, oh, okay, it came through your inbox, but you didn't click open. Then I got the second one in the afternoon. I didn't open it. I got the third one, and it said, hey, it created a FOMO experience. Like, here's even a better discount if you click on this.
Isn't it a span of a day?
In one day.
Wow, that's aggressive.
That is.
More so than the PR people that we get those bitches in our inboxes.
Exactly. E-commerce, what percentage of total retail sales is it today? It feels like, from what I hear from experts like you, that the pandemic really pulled a lot of that, share shift from bricks and mortar to e-commerce. Where are we today, and what are some of the retailers saying going forward?
Sure. I think we're going to probably, we're still around that 20%. I use that as kind of our average. And, if I look forward at least 2 to 3 years out, I think we're going to hit maybe 23%. It's never going to take brick and mortar sales away. Period. I'm very, very confident of that. And I think retailers are as well. If they're expanding, 50% are expanding over the next 5 years. So with that, e-com is just a part of that full sales journey for that retailer.
You think that the in-person footprint is still more valuable for experiential retail, though, rather than buying the stuff?
100%. So when I said I was secret shopping,
we were at Dave & Buster's. Is that what it was code for?
Oh no.
Okay.
It was actually not there. But I actually went into a store, and I went into 2 stores. And the experience was very different from one versus the other. One, definitely the greet, people are greeting you. They're saying, hey, let me offer you a drink. Why don't you sit here, take a photo, have
Wait,
your
they're offering
picture
you at what store is that?
It's not Walmart.
So I'm going there after this.
You can have multiple drinks. We actually had a second offer. So it was really very different compared to the other location I went to where I was greeted, but then it was like, hi, thanks, welcome.
Yep. All right, so you're in San Francisco, right?
I am.
Talk to us about the retail environment. How's life in San Francisco these days? 30 seconds.
Yeah, 30 seconds. I would say that it's a city that is very iconic. It's not going away.
Yep.
Will never change just from its, physical beauty. We are going through some transition and change. We understand that. It will be a slow recovery, but we're very confident and optimistic.
Good.
We love a soft landing take on this show.
Yes. Well, I tell people, like my international friends, hey, Paul, I'm bringing the family over for 2 or 3 weeks. Where do I go? I say, you can go to the New Yorks and the Vegas and all that kind of stuff, but you have to go to San Francisco.
You don't tell them Summit, New Jersey?
Well, that's a given. They come over for a drink.
Okay.
They come over to the Sweeney Estate for the Budweiser in cans.
Yeah, you're bullish on Summit.
Exactly. Angie Solanki, thank you so much for joining us. Angie is the National Director of Retail Services for the U.S. for Colliers, based in San Francisco. But we got the pleasure of her coming in New York into our studio today. S&P 500 up 0.6%. Dow Jones unched onto the day. Nothing happened in there. 36,055 on the Dow. NASDAQ, that's where the action is. Right now, with our news in New York City, here's Michael Barr.
Paul, Molly, thank you very much. After staying away for weeks, former President Donald Trump has once again arrived at a New York courthouse today to attend the ongoing civil fraud trial against him and his company. It comes as the months-long trial enters its final days. Once again, before going into court, Trump slammed New York Attorney General Letitia James, who is suing the former president.
And this Attorney General, who's crazed, she's a lunatic. The Attorney General sits here because she knows that she has a judge, and no matter all the evidence, that judge is going to rule in her favor.
Trump is preparing to take the stand for a second time next week. The fourth Republican debate was held last night in Tuscaloosa, Alabama. Frontrunner Donald Trump skipped the event, leaving the stage to former UN Ambassador Nikki Haley, Florida Governor Ron DeSantis, Ohio entrepreneur Vivek Ramaswamy, and former New Jersey Governor Chris Christie. Wendy Schiller, director of the Alfred Taubman Center for American Politics and Policy at Brown University, spoke to Bloomberg.
I thought that DeSantis had a good night and that Nikki Haley had more trouble than you might have expected, kind of fending off a lot of the attacks. She got stronger as the night went on, but of course, at the end of the debate, how many people are still watching?
Wendy Schiller with Brown University. According to Israel Defense Forces, its troops are inside Khan Yunis, the southern Gaza city the Israeli military says is home to the alleged mastermind of the October 7th massacre. The fighting between Israeli soldiers and Hamas is described as fierce. Meanwhile, Israel blamed the United Nations for the inadequate flow of food and other aid into Gaza. Israel says it is clearing 250 trucks a day through the border crossing between Egypt and Gaza. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom, this Bloomberg Business Flash. Well, it's the artificial intelligence craze that is fueling market gains. Alphabet jumping 5% after Google released Gemini, the largest, most capable AI model. At least that's the company line. Advanced Micro Devices also rallying after pledging its new accelerated chips will run AI software faster than rival products. Right now, the NASDAQ 100, 203 points higher. That's a rise of 1.3%. S&P 500, 31 points higher. That's up 0.7%. Dow Jones Industrial Average, 17 points higher right now, 36,071. Meantime, as 2024 inches closer, Jim Caron at Morgan Stanley is urging investors to diversify in a more dynamic way.
Look, I think 2024 will be a very interesting year. I think it'll be very dynamic. And in order for us to maintain a level of balance in portfolios, I think that investors have to be dynamic alongside that.
Chewy shares, let's pick those for a moment. Chewy shares in the doghouse, yeah, I said it, down 3.2%. The pet supply retailer cutting its guidance for full-year net sales that missed the consensus estimates. Analysts view the results as disappointing, with Citi describing them as lackluster. And we check the markets. You know, Paul, when I go on vacation, big deal for me, skiing the week before Christmas. I'm going to head up to Vermont. Hopefully they'll have snow. But others who are more fortunate in the studio, they go to places like Antarctica.
What? Who goes to Antarctica?
It is me.
Why are you going to Antarctica?
Why not?
What do you do at Antarctica?
I am not running the marathon. I will put that out there first, because a few people have asked me, am I running
It's just so
I'm not.
It's not so they're opposite of us, so they're coming up on summer, I guess.
Yeah, it is
spring.
tropical down there right now. I think the high is 30 degrees Fahrenheit. So maybe they'll have actual snow down there.
So you fly from
We are
JFK
flying to JFK to Buenos Aires a week from tomorrow. Arrive Saturday morning, hang out there for a few days, and then fly down to the southern tip of Argentina, take a cruise from there to and from Antarctica, week in Patagonia, and back to the studio.
Cool. All right, John.
But no, it doesn't really snow in Antarctica, because Antarctica is one of the driest places on Earth. It's kind of like a desert, like an ice desert. So it doesn't get a lot of snowfall, or at least that's what I'm told anyway.
I will report back. I mean, I have pitched an idea to our producer of maybe doing a segment from down there with the scientists. And the
Be
penguins.
careful where you step, because there's a lot of penguin dew all over Antarctica.
I imagine, it's their world. We're all just living in it. So
That's right.
Wow.
All right, very good.
So jealous.
Report back. All right, let's go to It's Thursday, which means we talk to Barry Ritholtz. He's host of Masters in Business for Bloomberg Radio, also chairman and chief investment officer of Ritholtz Wealth Management. Hey, Barry, we got a bunch of economic data this week, and today we had continuing claims right in line with expectations. Tomorrow we have change in non-farm payrolls. The streets look for 186,000. What do you make of this job market here? I mean, the unemployment rate, the headline's 3.9%. What do you make of this U.S. labor market these days?
The U.S. labor market is very strong, primarily because we have a shortage of workers, and we've had a shortage of workers ever since the pandemic. A lot of people figured out, hey, I could take the money the government's given me and I can upskill myself, get credentials, learn a different trade where I'm not in the bottom half of the economic strata. We're starting to see an uptick in immigration, legal immigration, but we have not been allowing enough foreign people with expertise to legally come to the United States and do jobs, whether it's on the high end in technology or entry-level jobs, fast food, farm, agriculture, things like that. There's no doubt that some of the frenzy around hiring and salaries has moderated. Things have softened a little bit since the pandemic ended. But, this plays right into the broader conversation about inflation. There was inflation in the pre-pandemic era, and there's inflation in the post-pandemic era, and they're two very, very different types of inflation, and you see it everywhere, including that difference you see everywhere, including the jobs market.
So what's the kind of inflation you said that we would be experiencing now than what you're saying in comparison to before?
So wherever there are shortages that were either exacerbated by the pandemic or revealed by the pandemic, those prices, the inflation rate may have come down, but the prices themselves remain elevated. And so far, we haven't seen any deflation. So when you look at semiconductors, that's the key driver in automobile prices, and a lack of new car sales during the past few years, or why you don't have a whole lot of used car sales at reasonable prices. Though that shortage has kept prices high. They're coming down, but they're not really where they should be. Labor is probably the most significant factor. And then obviously houses. I wrote something in, I don't remember if it was 21 or 20, about why everybody underestimated housing demand. And as people, the whole decade of the post-financial crisis was just a massive underbuilding of homes. And you didn't really feel it that much because a lot of college graduates were living at their parents' house. The normal measures of household formations were way below trend. And then suddenly the pandemic, all hell broke loose. And, oh, gee, we underbuilt houses for a decade, and now there's big demand. We have to catch up. So that's the main difference. When you look at the 2010s, the prime motivator, the prime, let's call it government stimulus, was monetary, very little in the way of fiscal stimulus. Post-pandemic, rates are much higher, fiscal stimulus is much higher, and so that tends to drive things in a very different way. Most of that fiscal stimulus, most of that pig is through the python, and that's why all the pent-up demand that we saw coming out of lockdowns, that's kind of worked itself out, and so we see things are just a little more moderate than they were, and they're trending in the right direction. When you look at inflation, and I was saying this in June of 2022, inflation kind of peaked May and June of 2022, and very few people, including the Fed, believed it. Now, Wall Street has very much wrapped their head around it. And so the question is, they're looking ahead. When do we see rate cuts? I don't know. I think it's a dynamic situation and depends on when we really see the economy weakening. I can't imagine the Fed's going to want to start cutting September, October, November in an election year. So if we don't see any cuts, before that, before the end of the summer, we're going to be stuck in a weird place. This could be a very unforced error. I think the Fed is already too high and too tight and should be taking things down a little bit to ease the tightness in the housing market.
Barry, about 30 seconds left. Where are you on kind of the recession call for 2024?
Everywhere I look, I see the economy is strong. Yep. So job growth is strong. Consumer spending is strong. There are some very specific, manufacturing has been doing really, really well. There are specific areas like housing that are problematic. That's a supply issue. I'm not in the recession camp yet, but I think if we have a recession, it will be a totally unnecessary, unforced error caused by the Fed tightening too fast, too much, and staying too high for long. As I wrote in Business Week in August, they should declare victory and go home. They've already defeated inflation. They just have to accept that.
All right, Barry, thanks so much for joining us. As always, Barry Ritholtz, host of Masters in Business on Bloomberg Radio. It's a great podcast. Check that out wherever you get your podcasts. He's also chairman and Chief Investment Officer of Ritholtz Wealth Management. A little move higher here today in the market. The S&P 500 up 0.7%. The action really here is in NASDAQ, the tech-heavy NASDAQ, as I like to say, up 1.2%. Yields pretty steady right here. The 10-year Treasury, you can get 4.11% in your 10-year Treasury. Again, a far cry from the 5% we saw back in late October, so big moves in the rates markets. Oil is steady here, just over $69 per barrel. Gold, $2,025 per ounce. And Bitcoin, it's off just slightly here, still just below $44,000. We'll have more coming up. This is Bloomberg. Let's get get some company news right now with Lisa Mateo.
You got it, Paul. SpaceX, it started talks about selling shares at a raised valuation of over $175 billion. Now, it's a boost from the summer's $150 billion. The tender offer may range anywhere from $500 million to $750 million. Meanwhile, SpaceX's Starlink satellite service completed 9 months of U.S. military tests in the Arctic, and that clears a way for Elon Musk to potentially deepen his ties with the Pentagon. And some more problems for Musk's other company, Tesla. The EV maker's Nordic labor dispute is getting worse. Now a Danish pension fund is selling its stock over the company's refusal to sign collective labor agreements. Tesla right now is up about 1.5%. Comcast customers, they're about to see their bill get a little bit more expensive in the new year. Bloomberg's Gina Cervetti has more on how high it will get and why.
The company, which owns the Xfinity brand, is raising prices for pay TV and internet access by about 3% because of its rising costs and investments on high-speed internet. But it's not just Comcast. Both AT&T and Verizon raised their prices earlier this year, too. Cord cutting and rising competition have eaten into Comcast's traditional customer base. In the third quarter, it lost almost 500,000 cable TV subscribers.
Comcast up nearly 2%. And fast fashion retailer Shein is feeling the pressure from another company offering deals. Unlike marketplace Temu, it had a great November. According to data from Bloomberg's second measure, sales on the platform that's backed by Chinese heavyweight PDD Holdings, it jumped 29% from a month ago to a new record. PDD Holdings is down about 0.8%. Those are the company stories we're following. I'm Lisa.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, we have some green on the screen. That is for sure. The S&P 500 it's up 0.7%. The Nasdaq's up about 1.2%. The Dow's pretty much unchanged on the day. The VIX sitting right at 13. We'll call that out for Tom Keene. So relatively low level of volatility in the equity markets. Yields also steady here, 4.12% on your 10-year. We are seeing WTI crude oil pretty much unchanged here, $69.50. So some stability in WTI crude, which had been in a pretty significant sell-off over the last several weeks. We'll keep an eye on that. With our news in New York City, here's Michael Barr.
Thank you very much, Paul. Molly, former President Donald Trump is at a New York courthouse this morning to attend the ongoing civil fraud trial against him and his company. He returned to the courtroom after weeks away as the months-long trial enters its final days. Before entering the court, Trump once again swiped at Attorney General Letitia James, who is suing the former president, calling her a lunatic.
We did nothing wrong. There were no victims. The bank loves us. The bank testified. They love us. We did absolutely nothing wrong. We never even defaulted. We never had a default letter sent to us. The bank said we were a perfect customer. The bank didn't even know why they were here.
Trump prepares to take the stand for a second time next week. The fourth Republican debate was held last night in Tuscaloosa, Alabama. Frontrunner Donald Trump skipped the event, leaving the stage to Nikki Haley, Ron DeSantis, Vivek Ramaswamy, and Chris Christie. On News Nation, DeSantis attacked Haley's record on gender reassignment procedures for minors.
If you're somebody that's going to be the president of the United States and you can't stand up against child abuse, how are you going to be able to stand up for anything? That is the truth. We have it on video.
I said that if you have to be 18 to get a tattoo, you should have to be 18 to have anything done to change your gender.
You said the law should stay out of it.
Wendy Schiller, director of the Alfred Taubman Center for American Politics and Policy at Brown University, spoke to Bloomberg.
You know, voting hasn't begun. DeSantis has collected fairly powerful endorsements in Iowa. Those are caucuses where people stand around in rooms together most of the time to cast their votes. And the dynamic, you know, the social pressure, the public pressure, that's very different than an open primary where you're actually just voting by secret ballot.
Wendy Schiller with Brown University. Reigning Masters champion Jon Rahm is reportedly set to leave the PGA Tour for the Saudi-backed Live Golf in an industry-rattling deal. Rahm, who is 29, is ranked number 3 in the world. According to the Wall Street Journal, it comes as the PGA and Saudi Arabia's Public Investment Fund are in talks to finalize a deal to join forces. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Molly.
Hi, Michael Barr. Thank you so much. We appreciate that. Hottest job in the U.S. pays $80,000 a year. No college degree needed. What do you got to do for that?
Sounds good to me. This is being a wind turbine technician. Ever hear of that?
No.
Well, hopefully, if this is something you're interested in, can't have a fear of heights.
I have a huge fear of heights.
Okay, so this is not the job for you. You're going to stay right here in the studio. But otherwise, I mean, this is a really fast growing fields right now. These are people who make and operate wind farms, and these experienced technicians, like you just said, Paul, can make about 80 grand a year without a college degree, but there's a lot of travel involved. You got to put up with some pretty extreme weather conditions and lugging around 50 pounds of gear up along these ladders to these confined spaces. So also maybe claustrophobia, not something good for this job, but it's one of the fastest growing jobs out there in the next decade.
Job postings for wind turbine techs in the U.S. have risen sixfold since 2018, according to data tracker Revolves Labs, and recent industry difficulties haven't slowed the pace here. I mean, I don't know. Somebody's got to go up there and service those things, I guess. But you think about them, they're generally 300 feet up in the air, and it's windy. Otherwise, it wouldn't be there.
Right.
So that sounds a little dicey.
I mean, this is like I said, you know, projected in the next decade, this is going to be an industry where it looks like these jobs are going to rise by the need 45% in projected job growth in those positions. So could be something good to get into.
All right. Good to know. Not for me per se, but if you don't mind heights and you don't mind maybe some dangerous working conditions, 80 grand, that's not bad. A lot more coming up. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, all of our guests are going to be in studio. How about that? Jen Rhee, she's a senior analyst. She covers antitrust for Bloomberg Intelligence. We're going to talk to her about the JetBlue Spirit merger and a bunch of other deals that are under regulatory review, see where we're going with that. Jonathan Maxwell, CEO of Sustainable Development Capital, discusses the outlook for global energy waste and use. And then we're going to talk a little bit about the private credit business, that fast-growing $1.5 trillion marketplace. Tim Lin, CEO at Antares Capital, they're going to discuss the outlook for private credit heading into 2024. But first, let's go get a Bloomberg Business Flash from Charlie Pell.
Hi, thank you very much, Paul Sweeney. And here's what's going on. We got a rally in mega caps underway. The Dow, the S&P, NASDAQ, all advancing right now. We begin with NASDAQ up 178 points, advancing now by 1.3%. The NASDAQ 100 index just about at 16,000, slightly above, up 214 points right now for the NASDAQ 100 index. That is a gain of 1.4%, and the Russell 2000 up by 0.4%. Bottom line here, S&P up 34 right now, up by about 0.75%. A rally in mega caps is spurring a rebound in stocks on speculation. The artificial intelligence boom will continue fueling market gains. Alphabet shares are higher a day after Google released Gemini, the largest and most capable AI model that the company says it has ever built. Alphabet up now by 5.4%, and Advanced Micro Devices also rallying up 7% after pledging that its new accelerator chips will run AI software faster than rival products. So an update, the Dow, the S&P, NASDAQ all advancing. So far this year, the S&P 500 index is up 19.3%. So where to find opportunity? George Patterson is Chief Investment Officer at PGIM Quantitative Solutions, and he was a guest this morning right here on Bloomberg Markets.
We're definitely looking at emerging markets, trying to avoid China right now just because a number of the headwinds that are going on with regards to property investment crisis problems there. But, really looking at EM, particularly EM ex-China.
And you can hear more of the conversation on the Tape podcast. You can download it wherever you get your podcasts. 10-year yield ahead of the jobs report tomorrow morning, 4.12%. The 2-year, 4.58%. Spot gold, lower a little change, down to 70 cents the ounce now to 2024. A drop of less than 0.1%. Crude, back in the red right now, down 0.1%, 69.32 for a barrel of West Texas Intermediate crude. Recapping, stocks are higher. Tech rally underway. S&P up 32, up 0.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pella, thank you so much. We appreciate that. Molly Smith, Paul Sweeney live here in our Bloomberg Interactive Broker studio. We're also streaming live on YouTube, so you can head on over to youtube.com and search Bloomberg Radio. And Bloomberg is now in your dashboard with Apple CarPlay and Android Auto. It gives you access to every Bloomberg podcast, live audio feeds from Bloomberg Radio, print stories from Bloomberg News in audio form, and the latest headlines at the click of a button with Bloomberg News Now. How do you get it? Well, first of all, it's free of charge, which is good, with the latest Bloomberg Business app. That's the Bloomberg Business app. Get it on your iPhone in the Apple App Store or on Google Play. Just download the app, connect your phone to your car, and get started. And it is all presented by our sponsor, Interactive Brokers. So that's a good thing there. We're going high tech here. Tom Keene is all over it. You can believe that. All right, let's see what's happening in the marketplace. Again, Charlie just reported we got some gains here in the equity markets. Let's check in with Bailey Lipschultz. He's got some details on some individual stocks. Bailey, what are you looking at?
Yeah, as Charlie mentioned, Google parent Alphabet, the biggest driver in the S&P 500, among the best performers. A lot of excitement coming from that release of its new AI model, Gemini. We are seeing some strength across large cap, though, as Charlie mentioned. Biggest drivers for the S&P using that MOV function on the terminal: Google, Apple, Amazon, Meta, NVIDIA, and then AMD. AMD rallying after unveiling their NVIDIA AI chip rivals. So all things AI continuing to drive this market higher and driving those Magnificent Seven stocks higher. One of the things that did stand out looking back through some of the analyst commentary around the Alphabet news was Roth MKM analyst Rohit Kulkarni saying that he expects the negative AI sentiment towards Alphabet to fade quickly, with Gemini ushering in a new era at Google. Interesting, because when we look at stocks like Apple, even going back to earlier this year, so much euphoria and mania around AI, a lot of investors were kind of pointing and asking, all right, when's Apple going to do something? How is Google going to implement that? How does that actually end up benefiting Amazon? And if you look at the news and kind of the unveiling from Alphabet, it does seem like these big tech companies are going to increasingly get into the space.
So when you were saying some of that negative sentiment around Google related to AI, it was more like, where are you guys? Like,
Exactly.
What update do you have?
When people were talking about Bing in a positive
Bing, wow.
light because of Microsoft's investment,
Matt Miller, he's re-embraced Bing because of ChatGPT.
I mean, to each their own.
Yeah.
Matt's at the forefront of everything.
He's cutting edge.
Now, yeah, he's all over those kinds of things. Looking in the biotech space, Cerevel Therapeutics, ticker CERE, right now up 12%. AbbVie acquiring the company an $8.7 billion all-cash deal. Interesting enough, the stock did rally 42% in the 3 days prior to the announcement. Some interesting options printing around that, but this is the second big deal unveiled by AbbVie in the last 2 weeks. Humira is their blockbuster drug, has long been one of the best-selling drugs in the U.S. They have a patent cliff that they're staring down, so continuing to kind of refill that pipeline of drugs. Paul, we talk about this all the time with biotech. Big bets can pay off, and if you have a good drug, it's going to be better off in the hands of a big pharma or a big biopharma company to really drive those sales.
What does Cerevel do? What's their big drug?
They are developing kind of a range of therapies in the neuroscience space, and that's really been an area that people have been looking for deals. So Karuna Therapeutics, ticker KRTX, is a rival. The stock is down, waiting on my terminal to load, down 3.4%. The debate after hours last night when this deal was unveiled was, did AbbVie look at Karuna? Does this mean that there's going to be more competition in that neuroscience space? Neuroscience, broadly speaking from a biotech perspective, is one of the highest risk areas because the brain functions so differently than things like immunology and different kind of disorders that can impact your body on a more regular basis. So the boom and bust upside and downside potential is much higher in neuroscience. We see that going back to like Biogen with the Alzheimer's drug being approved because there's just so much of a divide between how drugs can actually impact the brain.
Hey, Bailey, you also kind of cover the new issue market for us, the IPO market. What's the expectation for 2024 when you talk to your sources? Because, man, it wasn't very good this year in 2023.
Quiet this year. We're slightly above last year, which I believe was the lowest in at least 13 years in terms of cash being raised. Cautious optimism is kind of the talk of Wall Street banks when you're talking about folks who kind of originate these deals looking more towards the March to May time frame. That doesn't really bode well. When you take into account that, as you mentioned, the VIX is at like a 12 or 13 handle. You've got S&P back to where it was earlier this year. So not really a lot of excitement, but it does seem like that valuation spread between buyers and sellers is narrowing, which should set the table for the likes of a Reddit or a Shein or other companies to go public.
I mean, I was really zoning in more on the pizza rally this morning. I know we are big on the AI stocks, but like, can you please give us an update on Domino's and what's going on over there?
Domino's, ticker DPZ, up 2.7%. It does seem like demand's going to continue to play out. So when they look at their investor presentation, they're going to renovate products. They lifted their long-term growth prospects. A lot of excitement that adding stores and opening up and competing alongside some of those consumer companies. I don't know how you guys feel, though, being in the pizza capital about Domino's Pizza.
No, please. No, but again, when I lived in Durham, North Carolina, it was a godsend.
Syracuse University, I was going to say,
Bailey
Molly.
and I graduated together.
You don't have pizza in the Q's?
No.
I mean,
we didn't really have
remember,
much. We had
How about A-Crop?
Well, there was a reason that company went out of business.
Yes. Yeah. Short for Acropolis, that is. But Varsity is really, that is the namesake on Marshall Street. So it's, I don't know, it's got tough competition with Domino's up there.
Yeah.
The Q's. All right, Billy, thank you so much for joining us. Billy Lipschultz, the pride of Syracuse University, joining us here in these markets. All right, let's talk a little deals, M&A. And when you're talking M&A these days, for better or worse, that means we have to talk to Jen Reed because she is the senior litigation analyst. She follows all the antitrust stuff for Bloomberg Intelligence. And more deals are getting more and more challenges from this administration. Jen, thanks so much for joining us here. Talk to us about JetBlue and Spirit. Because didn't that trial, is it ending? Has it ended?
Just ended.
Okay.
But before I go into that, I have to tell you that this proud New York Italian would not eat Domino's.
No.
I just have to add that
Put
in.
that on the record.
I can't help it. So we had closing arguments December 5th. And you know what? I actually asked to come on to talk to you, Paul. Because,
nice.
Well, you've been really skeptical for months while I've
Yes.
said, hey, this deal's going to get blocked and it's anti-competitive. You've been kind of skeptical about it. And you know what? It actually might not.
Oh, okay.
I think it's a really close call. But, I went to most of trial, read transcripts. I read the transcripts for the closing. And I think this judge is really grappling with the deal and what to do because he sees that there is some evidence that it could harm some consumers. But he's also cognizant of the fact that Spirit's financial condition is really weakened with its current model and that it also could have a benefit in that it could spread, as the airlines argued, the JetBlue effect across the country and maybe bring down prices for a different set of consumers. And he's grappling with what to do with the both of those. And he kind of has to weigh them against each other. But the thing that struck me the most is that he said 3 or 4 times he was really uncomfortable with issuing a permanent injunction.
And so the trial was closed yesterday. How long does it take for him to rule, do you think? When will we hear?
I think we'll hear early January. So,
that long?
Yeah.
Okay.
He had originally said late December, and maybe he'll still try, but when he predicted late December, the trial was expected to start 2 weeks earlier than it did, which is why now I'm thinking early January.
So then what's the next step after we get the ruling?
Well, I think probably in this case, the loser will appeal because this is this controversial case. It's different from most merger cases in that there was an issue in areas where the companies don't actually overlap, which is kind of unusual. And also because the judge was clear that he's kind of grappling between, I have found harm, but I don't really want to issue a permanent injunction. And I've also found pro-competitive benefits, and I have to weigh those. So I think that no matter how he comes out, either side will probably appeal.
And just if you could tell us quickly what a permanent injunction is.
So that would basically mean an order from the judge that these companies cannot close their acquisition.
That doesn't sound good. All right, you mentioned Spirit Airlines. The issue for Spirit Airlines, if you use the DDIS function, the debt distribution, it shows you it's ugly. In 2025, the company's got about $1.5 billion in debt maturing. So they got to do something, and that's kind of what you're alluding to, right, Jen? That Spirit kind of needs to have something done here.
Right. Now, you can technically have a defense in a merger case called a flailing firm or a failing firm defense. It's a high standard to meet, and they didn't really kind of argue that in court, but they did bring up Spirit's weakened condition a lot, and the judge asked about it several times. In fact, in closing, he said, well, what happens if I block this merger and then Spirit goes belly up? How is anybody better in that situation? So he's thinking about that.
Is that something they could bring up in the event of an appeal, or is it too late?
Well, I think in the event of appeal, what happens is the judges have to look at the evidence that was submitted in the district court in the trial and then decide, did the judge make the right decision? I suppose that what the DOJ could do, if the judge decided I'm going to let this deal go through because of Spirit's condition, the DOJ could then argue, well, they didn't really provide the data and the evidence they needed to prove that they were actually in a failing condition. They could do that.
All right, so that's JetBlue and Spirit. What else are you looking at these days deal-wise?
Well, obviously, I just started looking at Alaska and Hawaiian because that's a new deal. I think it has less problems. It's one of those situations where apparently they really don't overlap very much, like 12 routes or so, and they could probably divest those. So 5 years ago, I would have said, this is going to be easy. They'll divest. They'll get it through. But this particular Department of Justice has said, we really don't want to settle problematic mergers with divestitures. We just don't want to do that anymore. We don't think it's worked in the past. So even though it doesn't really look particularly problematic, there's still a chance that the Department of Justice might decide to sue because of these overlap routes.
But what routes overlap from those two?
They specifically have said themselves they have 12 routes. I think most of them are from the West Coast into Hawaii, so probably different cities in California to Honolulu or different. I haven't looked specifically at what those routes are, but at the end of the day, it's 12 routes out of thousands,
right?
Which means they just sell them.
Okay.
Right. So what's the what is the status of just kind of the DOJ these days? Is it because of the administration that's in office or the leadership of the DOJ? Why is it perhaps a little bit more stringent these days than maybe we've seen in the past?
So it's the antitrust leadership for sure. You know, the antitrust, Jonathan Cantor, came in with a position that antitrust enforcement's been too lax, particularly
And was
in
he
the
a
merger
President
area.
Biden appointee?
He was.
Okay, so this reflects the administration. Okay.
Now, yes, it reflects the administration, and he's clearly backed by the administration because in July 2021, President Biden issued an executive order telling the agencies they needed to crack down on competition, they needed to crack down on consolidation, they needed to do what they could do to make sure industries don't get more consolidated. So part of that is telling this DOJ antitrust chief, you need to block deals.
Does that apply, you think, for healthcare as well, looking at the Cigna Humana?
Absolutely. I mean, there's no doubt. So the FTC tends to look at pharmaceutical deals while the DOJ takes these health insurance deals. And so I absolutely think that's going to get in-depth review. We're going to have to see what happens with respect to the overlaps. But yes, it's a risky deal. It's going to take a year or more. And then on the FTC side, we're still waiting to see if they're going to sue to block Pfizer's acquisition of Seagen. I suspect that they won't, but that's kind of a possibility out there too. So yes, on the healthcare side, absolutely.
All right. Jen, thanks so much for joining us. Jen Reese, she covers all the antitrust analysis for Bloomberg Intelligence, talking to us about some of these airline deals. I want to bring in Mark Gurman. He's a reporter, obviously, on the West Coast for Bloomberg News. Got some breaking news on Tesla. Mark, what do you got for us?
Yes, so Tesla has been working on a supercomputer codenamed Dojo, and this computer has a processor. It's very advanced. It competes with the high-end processors that a lot of the companies like Apple, AMD, NVIDIA, et cetera, are working on right now. And this is allowing them to train the AI data necessary to repair the autonomous car functionality that they've been working on for their Tesla cars and adding over the past several years. And so the head of that program, someone who is a chip industry legend, so to speak, named Ganesh Venkataraman, he has left. They have parted ways with him. They have put a new person in charge named Peter Bannon. He was a former mid-level chip executive at Apple. He's now leading the program. And obviously, when the head of the program leaves, that means there is some sort of strategy rethink going on, and it is a bit of a blow to the effort. So this is extraordinarily significant news, both within Tesla as well as in the modern processor and AI community.
Yeah, this sounds like a very high-level role here. I mean, what are your thoughts then, Mark, on Peter Bannon, and if he's going to be maybe just an interim position on leading this project, or you really need to start widening the scope and look for somebody new to come in?
Yeah, that's exactly right. This is an extraordinarily senior position. Not only the future of Tesla, but the future of all these car companies and all these technology companies we've been talking about is artificial intelligence and machine learning. And more so at this level, powered by what are essentially supercomputers based on the fundamental technologies that you're getting in chips and phones and tablets and computers at this point, laptops and such. So Peter Bannon is an expert in these ARM-based processors, these custom high-performance, low-power, AI-driven chips. And so that Bannon, in my view, will be the long-term fit here. He has an excellent reputation in both the chip and AI communities. He has the experience needed. Will they miss a beat in the short term? I would assume so. But in the long term, I think this is a fitting replacement for Ganesh.
Do we know why this person left Tesla?
We are not reporting at this point the circumstances surrounding his departure. There has been some strategy rethink in terms of where they're going to place the data centers that are powering the back end of these chips. It's possible there was some sort of disagreement regarding the direction there. The chip has been running behind. This was originally introduced a few years ago. The first version was supposed to come to market. As with many things we've seen from Tesla in the last few years, they promise certain timelines and have under-delivered. This chip has been part of that. Certainly, this is super core to the future of the company. So certainly, I think it has been, there has been some shakiness around the project. And anytime there's shakiness around a project of this significance, you may be in for some sort of leadership transition.
Yeah, tell us, Mark, a little bit more about this Dojo supercomputer project. This is what's behind the self-driving efforts, right?
Yes, this is behind the self-driving efforts. This is to capture data using camera sensors on cars and other Tesla equipment And then what this processor does is it inputs that information into the chip, as well as software algorithms in cloud-based data centers. It sort of chops that all up, mixes it together, so to speak, and creates training data for the cars to be able to understand what it has seen and be able to operate autonomously. So this is at the very core of that system.
All right. Mark Gurman, thank you so much. We really appreciate it. Mark Gurman, technology reporter for Bloomberg News on the West Coast, bringing us this news. Tesla's Dojo supercomputer head exits in blow to effort. So we'll keep on top of this story and bring you any additional reporting. Right now, let's take a little break here. Go to Charlie Pella and get a Bloomberg Business Flash.
Thank you very much. And here's what's going on. Tesla shares, they are up 1.2%, all part of a broader tech rally, a rally in mega caps, spurring a rebound in stocks today on speculation the artificial intelligence boom will keep fueling market gains. So here's where we stand. We've got the S&P now up 36 points. That is a gain of 0.8%. Dow Industrials up 42, up by 0.1%. NASDAQ 100 index up 240 points, up 1.5%. The NASDAQ Composite Index is up 1.4% higher now by 197 points. The Russell 2000 Index of small cap shares up 0.4%. 10-year yield 4.12% with a 2-year now yielding 4.58%. Gold down $3.50 the ounce to $2,022, down 0.2%. And a retreat for West Texas Intermediate crude down 0.5%, 69.05 a barrel on WTI. The 5-week antitrust trial over the $3.8 billion JetBlue Spirit merger is now over. A judge is weighing the impact on low-fare passengers. Jen Rhee is a senior litigation analyst with Bloomberg Intelligence, and she was a guest moments ago right here on Bloomberg Markets.
I think this judge is really grappling with the deal and what to do because he sees that there is some evidence that it could harm some consumers, but he's also cognizant of the fact that Spirit's financial condition is really weakened with its current model, and that it also could have a benefit in that it could spread, as the airlines argue, the JetBlue effect across the country and maybe bring down prices for a different set of consumers. And he's grappling with what to do with the both of those.
And you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. Meanwhile, JetBlue seeing its own effect today. We've got JetBlue shares up 10.7% after boosting its full-year financial outlook. Spirit, which uses the ticker SAVE, SAVE, it is up by 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pella, thank you so much. We appreciate it. Molly Smith, Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com and check us out there. COP28, Dubai, just ended, I believe, yesterday or the day before. But that's where all the folks, banks and companies and government folks get together and talk about sustainable energy on a global scale. Jonathan Maxwell was there. He's the CEO and co-founder of Sustainable Development Capital. Jonathan, what was your takeaway from the COP28 conference there? My takeaway, which is one of them, was the President Biden did not attend, and I thought that was odd where the other world leaders were there. What was your takeaway from your perspective?
I think there are two main headlines this year, which are a big deal, one of which is kind of what we've heard for many years, triple the renewable energy investing. Right, okay. But what's interesting about this COP, it's a UN conference that happens every year. It happens a couple of weeks. Most private sector people go over the weekend. It just happened because it's energy and finance. But the big news was actually something that I've been here to talk about before, which is energy efficiency. So there were two headline objectives. They said we've got to triple the rate of renewables and double the rate of energy efficiency. And that's really important because this COP was being held in a petro state. This is really the oil and gas industry, the big oil and gas industry, saying to, I think, the renewable energy and the clean energy community, you need us. We're here for the next 2, 3, 4 decades, right? So how are we going to transition? How are we going to make and so efficiency became a big deal. As far as President Biden's concerned, efficiency and renewables, he's put up, what, $370 billion of U.S. incentives and capital. There is a question, Paul, about what more he can do, right? A year away from a contentious election. Right. So I don't know what he would have done had he gone there. I mean, John Kerry was there.
Yep.
Bloomberg Green actually held an event on when was it, on Monday, which John Kerry was superbly setting out, I think, how important this transition is. But I think it was a reality check.
Well, you guys are all about. You guys are. I know a big focus of you guys is all about energy efficiency, inefficiency. And here's the data when I think of what you guys are doing. The world is wasting some 75% of its energy, around half of its fuel, and a third of its water. That's that stat. When I first heard it, I was like, whoa.
Yeah. Where is all that going then?
It's so crazy. It's such an extraordinary, huge dysfunction. I had to write a book about it. That's why I wrote this book called The Edge. I mean, sort of how we're pushing the world and its climate to the brink and what we do about it. Where does it all go? In a nutshell, right? About 10% of energy gets lost just in producing it. It leaks, and then you have to extract and convert it. The biggest piece of it is because we build big energy centers in the middle of nowhere and we feed communities, industry, and town. A lot of it gets lost just in generating it because there's nothing you can do with the heat. If you put a gas molecule in, which is how we make most energy, half of that gas molecule's energy goes to electricity. The other turns into heat. And if there's nothing you can do with it, it just goes up in the air into space. They don't need it in space. And then the next section is once that electricity, say, is out of the power station, you've already lost 60% of the primary energy. You lose another 10% getting it to the point of use. So this is what's happening just in getting energy into buildings like this. In Manhattan, this is an excellent building. Mr. Bloomberg's had this nailed for a really long time.
You should see the London office.
Yeah, I have. It's amazing. But, not all buildings like that, right? So on average, they waste 20-30% of the energy they use. So that's how you get from 70 to 75%. This is huge. It's catastrophic. We're fighting over this energy all over the world. It's costing a fortune. We've got cost of living crisis. We're building, by the way, for trillions of dollars. We spent $6 trillion on renewables over the last 20 years, $3 trillion on the grid. And meanwhile, we're wasting 3/4 of the world's energy. I think it's a call out. And this is why I say we're wasting the energy. By the way, we're wasting half the food and a third of the water. And that's the problem.
Is that fully understood? And is that a focus of action from the folks at COP28?
All right, so it depends who you are. So the fact that it's actually on now on the headlines, if you think about the clean energy train coming down the track, it's only really been one lamp on the front, renewables, right? Now you got 2 lamps. It says you can't get there with renewables on its own. You have to be more efficient. So the UN has seized this. I think the Department of Energy in the US, at least 20% of the Inflation Reduction Act has gone into it. I think it should be at least half. And in Europe, there's a policy, it's called, and this happened when Russia invaded Ukraine and we got cut off of gas in Europe, that's the 40%. The Europeans came up with a policy, it's got 3 words, energy efficiency first. Not second, third, tomorrow, maybe, one day. Energy efficiency first, because they said, look, for every unit of gas we don't use, it's 2.5 we don't need to buy from Russia. Why? Because we're wasting 2/3 of it. So, Paul, I think we've been in the sort of business of producing, supplying. Now, I think we're in the business of reducing, being more efficient. I don't mean degrowth. I just mean doing more with less. It's more competitive, more productive. It's better for security.
So in these geopolitical risks, you just mentioned Russia and Ukraine. I was wondering if at all that Israel came up during this. I know like when the war first started, there was some concern of the gas lines that go leaving out of Egypt and if those could be impacted. And of course, the greater concern if the war would escalate, involve Iran, what that would mean for oil. If you could tell us if that at all came up in the conference.
Did you read my Substack 2-3 weeks ago? This is exactly what it was about.
Well, I want you to tell the listeners.
Yeah, no, it's a point. I mean, I think this is the point. I mean, the Russia-Ukraine nexus is really a lot about, not all about, but a lot about energy, right? And Russia was using Ukraine to pipe gas into Europe. That game has come to an end now. In Israel had done a deal about a year ago with the European Union, and that was to send gas, which it's been exporting to Egypt, but liquefy it and send it to Europe. Europe needed that gas because of the Russia-Ukraine invasion. And I'm not saying for one moment that's a cause of the Israel-Hamas conflict, but it's definitely a match in the matchbox. I mean, that Tamar gas field that exports gas from Israel to Egypt is off the coast of Gaza. The Leviathan gas field was actually decommissioned. It's now been restarted, but decommissioned because of security concerns from Hezbollah. So there's no question that if you're the Israel and you've since 2019 been exporting natural gas, clearly this is not going to be great news for Hamas or for Hezbollah and Iran, who will look on with a dim view. Now, I'm not saying that this is the cause of the war, but I am saying that competition for resources lurks beneath the Russia-Ukraine crisis. It lurks beneath the Israel-Hamas crisis, and it's going to lurk, unfortunately, behind some other military conflicts, zones and flashpoints. And that's one of the points I make in my book. Look at the Arctic, look at the South China Sea. These are serious resource competition arena.
At COP28, what was the sense of global progress towards, the original Paris Agreement of 2015? Where are we? Where's the industry? Where's the world in terms of kind of getting to where we need to be?
All right, I'll start with the bad news and I'll come to some good news. So the bad news is we're not doing great, right? We just had this year is a record year for fossil fuels. Carbon emissions are going up. It's not going well.
Global temperatures,
record year, right?
Yeah.
I mean, there is, by the way, El Nino. So let's just make sure that we understand that this is a 5-year cycle and we've got a particularly hot year. But all of these things are contributing. So we're not doing great. And the most important number for me is 82%. 82% is the proportion of the world's energy that's oil, gas, and coal. And that substantially hasn't changed since Paris. So I'm going to come on to the good news. The good news, and with a little bit of reference to the bad news, the good news is renewables are accelerating exponentially, which is fantastic. But they're not, the bad news, they're not displacing fossil fuels yet. So you're just adding into this system, right? And that's why I've been advocating for 15 years for energy efficiency, because adding into this system isn't helping as much as not using so much energy to do the same job. But what happens if you don't use the energy? We don't need to waste all this energy, either at the point of use or getting it there. So if we do better, if we cut the amount of energy we need to do the same job, it has 3 huge, incredible benefits. I'm going to start with the economy, because I'm here in the United States.
Good.
The best one. Cutting energy cuts costs. You have to pay less for it. It's the biggest source of competitiveness and productivity. This country has the most incredible endowment for the next decade. It's energy independent. This wasn't the case before 2019, but don't waste it, right? Use that energy, export it, use it here, but don't waste it. So that's the first point on cost and competitiveness. And if we do that in the United States, we're in a much better position. The second component is carbon. By not using energy in the first place, that's the largest, fastest, cheapest source of greenhouse gas emissions. And then the third point, coming back to energy security, is that there are military conflicts arising, and there have been since the Second World War, over oil and gas and other resources going forward. I'm afraid we need lots of metals and minerals for the clean energy transition. We need to be more efficient by using them, because competition for coveted resources creates conflict. So for those reasons, energy efficiency, resource efficiency is critical. I've only talked about energy today, and food. How do we make food?
We'll come back onto that.
With energy?
Another time, for sure.
Jonathan, you're nothing if not passionate about this, so I think that works for a positive outcome, hopefully. Jonathan Maxwell, CEO and co-founder, Sustainable Development Capital, and we appreciate getting some of his time. Right now, let's head down to Washington, D.C. World and National News with Nancy Lyons.
Thanks, Paul. The calls for a ceasefire in Gaza are growing, with UN Secretary General Antonio Guterres expressing major concerns about civilian casualties and humanitarian aid. In a letter to the Security Council, Stéphane Dujarric is a spokesperson for Guterres.
The Secretary General urges the members of the Security Council to press to avert a humanitarian catastrophe, and he appeals for a humanitarian ceasefire to be declared.
Dujarric says this is the first time a UN leader has invoked Article 99 of the UN Charter since 1971. It allows the Secretary General to bring any issue to the Security Council's attention that threatens international peace. The presidents of Harvard and the University of Pennsylvania have been forced to issue statements clarifying their responses to a U.S. congressional hearing on anti-Semitism. They've come under a barrage of criticism from business leaders and politicians for hesitating to say that calling for genocide of Jews violates school policy. In this video posted on X, UPenn President Liz McGill says she was focused in on the moment of her school's policy not to punish speech alone.
I was not focused on, but I should have been. The irrefutable fact that a call for genocide of Jewish people is a call for some of the most terrible violence human beings can perpetrate. It's evil. plain and simple.
The UPenn Board of Trustees is holding an emergency meeting right now. Along with Penn's Liz McGill, Harvard President Claudine Gay issued a statement saying, quote, calls for violence or genocide against the Jewish community or any religious or ethnic group are vile. They have no place at Harvard, and those who threaten our Jewish students will be held to account. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at gains for the U.S. stock market with the Dow, the S&P, and NASDAQ solidly in the green, trading at or near session highs. Right to the numbers, S&P up 35. That is a gain of 0.8%. Dow Industrials up 61 right now, higher by about 0.2%. The NASDAQ 100 index up 231 points, an advance right now of 1.5%. The NASDAQ 100 index is advancing, as we mentioned, by just about 1.5%. The NASDAQ Composite Index up 1.4%. 10-year yield 4.11%. We have got the 2-year at 4.57%. Gold down $1 the ounce to 2024, drop there of less than 0.1%. And a retreat today for crude. West Texas Intermediate down 0.7% right now, 68.89 a barrel on WTI. Well, as for the economic backdrop heading into the new year, Conrad de Quadros is Senior Economic Advisor at Green Capital, and he was a guest this morning on Bloomberg Surveillance.
Right now, I think as we look ahead to 2024, I'm not sure I would put us in the most optimistic group. We are still of the view that we are likely to see a recession in 2024. I know most economists have backed off that view, and we think that there are signs in the labor market that it should still be the baseline, and obviously Friday's jobs report is going to be very important for that.
Sources tell Bloomberg, and our Mark Gurman is reporting that Tesla is replacing the head of its Dojo supercomputer project. Right now, we do have Tesla shares advancing by about 0.5%. Elon Musk, meanwhile, is facing a deepening crisis in the Nordic region after a local pension fund exited Tesla over its refusal to sign a collective agreement covering workers in Sweden. Again, recapping, U.S. stocks are advancing on this Thursday. S&P up 34, up 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Molly Smith, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, and we're streaming live on YouTube, so go over to that internet thing and find it over there. Private credit. That's been our story, man. We've been all over this. Tim Line, he's the CEO of Antares Capital. We want to get right to him. He's in our Bloomberg Interactive Broker Studio. Antares Capital is based in Chicago, one of my favorite towns anywhere. And he's now here in New York because why not? Because this is the global capital of the world.
Because we got to be in the studio.
Exactly. Hey, Tim, thanks so much for joining us here. $67 billion of assets under management. That's what you guys have?
Yes, we do, Paul.
That is awesome, dude. All right, so talk to us about the private credit business. What's a typical type of deal you guys like to look at, like to invest in?
Sure. So Antares, we finance middle market North American businesses. So middle market would be companies generally 20 to 150 million in EBITDA. We like companies that are recession resistant, companies that truly have a reason to exist. So there's something that they do that's proprietary. Recurring revenue businesses. We love software businesses, a lot of healthcare businesses, business services, some manufacturing businesses, but generally higher margin companies, 15, 20% EBITDA margin and above, and highly diversified. So we don't finance companies that have a major customer concentration, for example.
Does your deal flow come in from the private equity space and they're looking for a debt piece for the transactions? Is that typically how your deal flow comes in?
Exactly, Paul. So the idea is the company's been in existence. We started the company in 1996.
Good timing.
So we've been calling on these private equity sponsors for, really 27 years, the ones that have been around that long. But we've established those relationships. We've financed numerous companies for these sponsors over time. So it's kind of that long-term relationship. We have the ability to source a lot of transactions, and it allows us to be highly selective. So we only finance 4% of the deals that we see.
Tell us about your portfolio right now and how these companies are doing in this higher rate environment.
Sure. So we have 485 companies in the portfolio. Once again, the largest sectors would be software, healthcare, and business services. That's about 50% of the portfolio. The companies that were financed, in 2020, 2021, in a zero interest rate environment, were done at 6.5, 7 times EBITDA or more. the interest coverages and the fixed charge coverages are definitely tight. Some of the companies have grown into the capital structure, but the ones that haven't are going to require, and maybe in some cases we've already done this, the sponsor is stepping up with additional capital to fix the capital structure. Sometimes, we'll provide some changes to the deal as well. Some of those deals, there's a big opportunity for preferred stock to come in to kind of, preferred then is used to pay down the debt to bring it down so that the company's interest coverage is more reasonable.
So I see you're early in your career, GE Corporate Finance. I did a ton of business with those guys back in the day. Super good on the credit side. You guys knew your numbers back then, and you're good lenders here. What do you look for? Like, do you have a certain leverage threshold that you like, and coverage ratios and all those great credit metrics, or is it company by company, sector by sector? How do you guys look at it?
It's absolutely company by company, sector by sector. Now, generally in our deals, depending on the sector, the leverage, like software companies, basically the leverage will be higher because those are very much recurring revenue, proprietary types of businesses. But every deal we analyze on a standalone basis. And the great thing is when a company comes in, let's say it's a packaging business. Well, we have 485 companies in the portfolio, and I don't know, there might be 15 to 20 other packaging companies. So we can immediately look at those companies, revenue growth, what's been happening with margins, what's the EBITDA margin, what's the CapEx level, and do a quick comparison, which is helpful from a diligence standpoint.
So private credit's been around for a while. I mean, you just said Antares founded back in 97?
96.
Okay, yeah, so even longer. Why is private credit now, it seems suddenly becoming like this, like the hottest asset, really just, blowing up this year? Why now?
So it's a couple reasons, Molly. It starts with, in my mind, there's private equity penetration of U.S. middle market companies. McKinsey estimates it's maybe 12 or 13% of companies in North America. We think that's growing, and it's going to grow pretty significantly. So more companies will be owned by private equity. Combine that with banks that have essentially had to exit the business. So the banks with the regulations in place, it makes it difficult for them, it sounds crazy, for banks to lend money to companies. So a lot of that has transferred to private credit. And so while some will say, oh, private credit, is it a bubble? Should it be more regulated? At the end of the day, private credit is the industry that is providing liquidity to North American middle market companies today.
Because the banks are not.
Correct.
That is just crazy. That's it's frustrating to me. I used to start my career lending money for a bank, and I wouldn't have lost business to you. We were Chase. We didn't lose any deals.
Not to anybody.
Yeah, but now I see. It's such a great business here. So, but I am concerned that if one of your portfolio companies blows up, it's the people that bear that risk are your institutional investors who invested in your funds.
Yes.
And they are all accredited investors. They know what they're doing.
Sure.
So that's kind of that's the mechanism, right? To just,
it's not really a retail investor space.
Right. So the retail, I'm trying to think, it feels like it should be more regulated just because it's been growing so quickly. But in reality, it's a private institutional marketplace.
Correct.
And that's...
And by the way, the company is SEC regulated already. Right. So, and we're not taking customer deposits. So we're not a bank. We're not taking deposits that are insured by the government. We're taking, our capital's coming from, we're owned by Canadian Pension Plan, which is a huge sovereign, over $500 billion in capital under management, along with Northleaf Capital, another Canadian, and management. And then we're raising money from very sophisticated institutional investors. I will say, on the retail side, I think it is a huge opportunity, but a huge opportunity for us with high net worth and ultra high net worth. So again, very sophisticated investors that are using a big investment bank to manage their money, and we set up a program with them. So it's not, mom and pop retail.
Yep, fascinating business. Thanks for coming in. We appreciate it. Next time you're in New York, let us know. We'll get you back on because we love this business. It's really just a really interesting part of the capital markets system that when I started my career wasn't really a thing, but boy, it's become such a great source of capital for a lot of businesses. Tim Line, he's the CEO of Antares Capital. They are based in the great city of Chicago, Illinois, one of my all-time faves, and we love the private credit business. So there you go. S&P up 0.8%. This is Bloomberg. Let's get some company news right now. Lisa Mateo.
Thanks, Paul. Alphabet has released Gemini, its latest and most powerful AI model. We get the backstory from Bloomberg's Simone Foxman.
Now, Google invented the technology behind the current AI boom, but OpenAI and its ChatGPT and DALL-E have really taken a lot of the popularity. So Google wants to get back into the game with rolling out this Gemini AI model, which is usable through the public through the chatbot Bard.
Now, there are 3 versions of the technology. Gemini Ultra is the most anticipated, but it won't be released to the public until next year. Alphabet right now is up about 6%. Chipmaker AMD is higher, and that's after it unveiled a new AI chip. Bloomberg's Ed Ludlow says the MI300X is a direct competitor to NVIDIA's H100.
It has a technological advantage in that the AMD GPU has something called HBM3, which is the latest cutting edge of high bandwidth memory. High bandwidth memory reduces latency, it makes it more power efficient. And when I was chatting with the CEO, Lisa Su, yesterday, the main point is that it's a cost competitive product.
Now, the company also gave more insight as to who else will buy the GPU. Meta is going to put it in its data centers. AMD also updated its 2027 call for the total addressable market for AI accelerators to $400 billion. Shares right now, they're up about 8%. NVIDIA, checking in with them, they're up nearly 2%. And Meta Platforms moving to make messages on Facebook and Messenger more private. End-to-end encryption of personal messages will now be the default setting on the social media platforms. Encryption has been an option, but users actually had to turn it on themselves. Those are the company stories we're following this hour. I'm Lisa Mateo. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, Molly Smith, Paul Sweeney live here in our Bloomberg Interactive Brokers studio, and we are streaming on YouTube as well, so you can head over to that internet thing. You can figure it out there. Max Abelson joins us. He's a reporter for Bloomberg News. He's also a TV star, Bloomberg Business. What's the show called again?
The Bloomberg Business Week Show. Actually, you know what? Not Bloomberg. The Business Week Show.
The Business Week Show. There you
right.
go. Boom. So you guys have been doing this for a number of weeks now. What's the upcoming show you guys have? Because it's Thursday night at 10:30 p.m. Wall Street time.
That's it.
Boom.
That's it.
So what's the next upcoming show?
We got a good episode tonight. It's the ownership. It's the ownership episode, which is like kind of a very abstract concept. It was relatively easier to do imagination, risk.
Really?
It's like
Okay.
how do you do ownership? We brought in someone who owned very, very little, and now she's on her way to owning a lot. Her name is Pinky Cole. I don't know if you two have ever eaten at a restaurant called Slutty Vegan, but
have not.
Cannot say I have.
It is a hugely popular vegan fast food restaurant that started, I believe, in Atlanta. I think they have 15 or 16 thereabout restaurants, and they got a huge investment from Danny Meyer.
Really?
Obviously.
Oh, that's big.
Yep.
Yeah.
I believe the company's now valued at $100 million.
Wow.
She just wrote a memoir called I Hope You Fail, and she has such a vivid story. She had one restaurant that burned down. She didn't have fire insurance.
Oh.
So she really had to start from scratch. Her father was sentenced, I believe, to 30 years of prison on the day she was born.
Wow.
On the day she was born. So Pinky Cole's story is absolutely vivid and magnetic. And then we have a truly important and interesting sociologist named Matthew Desmond, who's famous for winning the Pulitzer Prize for his book Evicted. He studies eviction. In fact, he has the Evicted Lab at Princeton University. He's the principal investigator of. He has a new book called Poverty by America that in some ways is all about ownership as well. Together, they make for a heck of an episode.
So what do each of them own? What are we talking about?
Oh, good question. Well, Matthew Desmond is, in a way, a critic of the way that the system of American ownership works, and he has an argument that there are so many people who are so poor in a country that is so wealthy because we, the ownership class, want it to be that way. And his book is almost a kind of manifesto. It's sort of an argument that we have a responsibility to basically to end poverty, and his book basically argues why that's possible. I really recommend it. It's heavy, but it's a beautiful read.
All right, so this chief executive officer, Pinky Cole, I mean, where are these restaurants? You said found in Atlanta. Are they kind of around the country? Where are they?
Well, I have good news for you.
Is one in New York?
One's in New York. I'm taking the crew out to lunch, and you are officially invited to join us.
As I went to Keen Steakhouse last night.
Did you?
Yes.
Well, I happen to be a non-vegan who has had many fun nights at Keen Steakhouse myself with a steak and a martini. But there's a Slutty Vegan, I believe, on 125th. There's also, for any Brooklynites listening, I believe there's a new one in Fort Greene. But what I find impressive about Pinky Cole is that she clearly discovered a need in the market. She realized that there was a certain kind of fun that could be had with vegan food that she felt that she didn't see, and she filled a void. And to the extent that there's something very magical about capitalism, that's it. It's like supply and demand. Like, she saw that there was a demand, and she created a supply where there was none, and now she has a business worth $100 million.
Yeah, and real quickly, Max, I guess for her, it's also probably getting non-vegans to come in too, right? That's got to be part of the value add here.
Yes. As you can tell from the name Slutty Vegan, and I was worried that we weren't going to be able to say it on TV, as I worried that we wouldn't be able to say it on the radio. There's something a little bit tongue-in-cheek, something a little bit saucy about it, and it's more than just the name. The whole vibe when you walk in is full of that kind of language. The burgers are called like One Night Stand.
Yep.
In a way, I think she might potentially prove to be a kind of genius of American marketing. I think she might really understand this moment in American culture a lot better than some big corporations. I have a feeling that we caught Pinky Cole at a moment where she's just simply a big rising star. I mean, she was on the Bloomberg 50. She's big.
Okay.
But I have a feeling she is going to be a lot bigger.
All right, Max, thanks for joining us. Max Abelson, reporter for Bloomberg News. The show on Bloomberg Television tonight's Business Week show, and that is on 10:30 p.m. Wall Street time on Bloomberg Television. I'm sure you can find it all over the social stuff as well. Sound On with Joe Matthew in Washington, D.C. That starts just about right now.
That's awesome. So what did you think? How's the food?
Well, we haven't gone because
you haven't been yet.
to the wrap.
Oh, okay.
We're going to do the wrap.
Now, from our nation's capital, this is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from D.C.'s top names.
The Republican caucus is at war with itself. Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Does it even matter who won? Welcome to the fastest show in politics this day after the 4th Republican presidential debate, which Donald Trump, of course, skipped, featuring combat and conspiracy in Alabama. We're going to talk you through it with political analyst Alan Abramowitz from Emory University. And we'll see whether it had any impact on the race in conversation with our signature panel. They're both back with us today. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano with more to talk about. A vote on funding Ukraine and Israel just failed in the Senate. And New York Congressman Jamal Bowman is censured for pulling the fire alarm in the House. We'll get to all that after a look at Wall Street. That's where we start every day now. Charlie Pellet has the update on the markets. Hey, Charlie.
Well, hello there, Joe Matthew. We're looking at another up day and potentially another up week for the S&P 500 index. If that does happen, it will be 6 in a row. Right now, we have got the S&P 500 index advancing by 36 points. That is a gain right now of about 0.8%. Dow Industrial is up 92, higher by 0.3%. The NASDAQ Composite Index up 193 right now, up by 1.4%. A rally in mega caps spurring a rebound in stocks on speculation. The AI boom will keep fueling market gains. 10-year yield 4.10% with the 2-year right now 4.58%. Spot gold up $3.50 the ounce to $2,028, up by about 0.2%. West Texas Intermediate crude, little change now, down less than 0.1%, $69.31 a barrel. Bottom line here, traders are brushing off any jitters surrounding the outlook for tomorrow's jobs report. And as for the broader economic backdrop, Tiffany Wilding is North American economist at PIMCO.
If you looked at 2024, you have demand, which is potentially coming down. But some of the things that added to supply, like supply chain normalizations, we have the labor force participation rate for the prime age folks that are now, it's back to pre-pandemic levels. We're just not convinced maybe that you're going to get as much on the supply side next year.
And you can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Elon Musk is escalating his public criticism of Bob Iger and says Walt Disney's CEO should be fired immediately on X. That is the social media service that Musk owns. He said, quote, Walt Disney is turning in his grave over what Bob has done to the company. And in a series of posts, Tesla's CEO appeared to refer to the box office performance of some recent Disney film releases, saying Iger, quote, drops more bombs than a B-52. We've got shares of the Walt Disney Company up 1.5% right now. Tesla up by 0.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thanks. Good to see you. Welcome to the Thursday edition of Bloomberg Sound On. Welcome to Little Friday. I'm Joe Matthew in Washington as we all try to recover from whatever that was last night. Anne Marie calls it a candidate forum. I'm pretty sure it was a debate. Of course, didn't include the front runner. And it seemed to be a pretty good night for Nikki Haley. Now, as usual, we're watching so you don't have to. And as I see the headline on the terminal, kind of the conventional wisdom here across town, Wall Street darling Haley draws rivals fire as bid gains steam. You know you're doing well when everyone's triangulating. And we'll get Rick and Jeannie's take on this ahead. We're also going to talk to Alan Abramowitz from Emory in just a moment. But just to give you a sense of what it was like when the knives came out, many of them aimed at Nikki Haley. Enter Vivek Ramaswamy, complete with props.
We're talking about that trans issue. And Nikki Haley's campaign launch video sounded like a woke Dylan Mulvaney Bud Light ad talking about how she would kick in heels. At the first debate, she said that only a woman can get this job done. That's what she said. After the third debate, when I criticized Ronna McDaniel after 5 failed years of leadership of this party and criticized Nikki for her corrupt foreign dealings as a military contractor, she said that I have a woman problem. Nikki, I don't have a woman problem. You have a corruption problem. And I think that that's what people need to know. Nikki is corrupt. This is a woman who will send your kids to die so she can buy a bigger house.
Who would send your kids to die so she can buy a bigger house? If you couldn't hear him over the applause. It was at that moment that Vivek Ramaswamy held up a piece of paper that he scribbled with a Sharpie, Nikki equals corrupt. That's where we start our conversation with Alan Abramowitz, Professor Emeritus at Emory University, and a voice we turn to at times like this. Professor, it's great to see you. I suspect you endured this exercise for the better part of 2 hours as well. I just have to start there. What do you think of props in a debate?
Well, I don't think it's going to be very effective. Let's put it that way. You know, I think Vivek Ramaswamy is just sort of reinforcing the impression that most viewers would have already had of him, that he's extremely annoying, and you know, and that he tends to put forth a lot of conspiracy theories. And so, but it's understandable that he's attacking Nikki Haley, and it's understandable that the other candidates would be attacking her because she's the one who's been rising in the polls.
Mm-hmm. Yeah, so that is probably a pretty good feeling, right? She said you guys are jealous when they asked her about big money donors turning in her direction. Chris Christie called Vivek Ramaswamy an obnoxious blowhard, among other things, last night. Was that the last stand for Vivek, or does he make it through the early states?
You know, I don't know. It's hard for me to imagine that he's going to be able to continue raising money, given that he's, you know, he's stuck in the low single digits in the polls, both nationally and in the early states. So it wouldn't surprise me too much to see him dropping out of the race fairly soon.
Chris Christie, it's been suggested, might be considering the same. He certainly came loaded for bear last night. He was the only candidate, I think, who mentioned Donald Trump at least more than once, and it took about 20 minutes to get into the debate, which I'll ask you about. He was going after Vivek Ramaswamy, though. It was suggested earlier, and I believe it was Lauren Tomlinson who said on this program, among some others, that he may have actually had a bit of an agreement or a deal with Nikki Haley to try to have her back during this debate. That seemed to emerge a couple of times. Here he is, though, going after Vivek.
Okay, you say this, you do this at every debate. You go out on the stump and you say something. All of us see it on video. We confront you on the debate stage. You say you didn't say it, and then you back away. And I want to say one.
Exactly what I said, Chris.
I'm not done yet.
Well, this
now
is
look.
This is nonsense. This man is spewing. This man is spewing nonsense.
Let me tell you something.
Fight night.
This is the fourth debate. The fourth debate that you would be voted in the first 20 minutes as the most obnoxious blowhard in America. So shut up for a while.
There it is. Professor Abramowitz, was he running defense for Nikki Haley last night?
Well, it certainly is in her interest, I think, because Ramaswamy's going after Nikki Haley, so you're seeing Chris Christie taking on Ramaswamy. Chris Christie isn't going anywhere, you know, in this nomination race. So it's a question of, you know, whether Nikki Haley can consolidate the non-Trump, anti-Trump, non-Trump, whatever you want to call it, vote quickly enough to make a respectable showing in the early states that would allow her then, you know, to continue. I mean, so she's made some gains, but the reality is that, you know, she's still far, far behind Donald Trump. Everyone else is far, far behind Donald Trump. And I don't think anything that happened in that debate is going to, you know, change that fundamentally.
Haven't even mentioned a guy named Ron DeSantis, at one time the presumptive front runner. And Professor, we know that he's been struggling, although a lot of folks said it was his best performance last night. I found this curious as they got to matters of the economy and personal finance, the issue of inflation, which he hung around the neck of Republicans. Here's the governor from Florida.
These Republicans in Washington have spent, it's driven your prices higher, and it's driven your interest rates to the point where you can't afford.
Does that argue with the greater message from the GOP?
Well, I think the point he's trying to make is that he's not part of the Republican establishment. That he's challenging the Washington establishment, you know, and so by trying to blame Republicans as well as Democrats for excessive spending and for inflation. I think that's the argument that he's trying to make. But whether that goes over well, I don't know.
All right, Professor, how many of these four, if not all of them, will be in the race when we go to Iowa next month?
So the big question to me is whether Chris Christie is going to drop out fairly soon and endorse Nikki Haley. We've already seen there's been a movement of the sort of non-Trump kind of establishment wing of the Republican Party to try to get behind Nikki Haley. With the inability of Ron DeSantis to really connect with Republican primary voters, I think Nikki Haley is now seen as the most viable alternative to Donald Trump, and we've seen that with the Koch money now coming in with their organization backing Nikki Haley, and so Chris Christie does have some support, especially in New Hampshire. So I think if he would drop out and endorse Nikki Haley and campaign for her, that could help her somewhat, get at least closer to Donald Trump, and she desperately needs at least a strong second place finish in Iowa and or New Hampshire. I think New Hampshire is probably a little bit better bet, but one of those two states, in order to continue her campaign, beyond those early states.
It's good to see you, Professor. Let's stay close as we make our way through the cycle.
Sure.
He joins us from Emory University, Professor Emeritus Alan Abramowitz with us on Bloomberg Sound On. I'm Joe Matthew in Washington. As we assemble our panel, dying to know what Rick and Jeannie think. We'll let this breathe a little bit here because we've got a few more moments from the debate, and we've also learned that there are going to be a couple of more debates, which is something that I believe Rick predicted here. We're going to have one just before Iowa. We're going to have one the night before New Hampshire. Let's bring them in now. Bloomberg Politics contributors Jeannie Shanzano, Rick Davis. We were watching, so you didn't have to. Guys, I'll start with sort of the obligatory question here. Rick, the guy who was not in the room and was barely mentioned last night other than Chris Christie, was it another win for Donald Trump?
Yeah, I have to say, I mean, I don't think it's a win for Donald Trump anymore. One, because I don't think anything arrested Nikki Haley's climb, and that climb could threaten Donald Trump, especially in a place like New Hampshire. So when these debates started, he had no threats, legitimately. Now he's actually got a potential threat, and when you look back, if anything happens in New Hampshire, like Nikki Haley's surprise victory, we know something about those kind of things, people will analyze that his lack of attendance at these debates opened the gate for her to move up. So, yeah, I mean, sure, he didn't get any of the mess on him last night. He was out raising money, having a good time. But I'm not exactly sure the history is going to prove that to be a good thing.
Before I bring in Jeannie, Rick, we've just learned CNN's going to host two presidential primary debates, one at Drake in Des Moines, January 10th. The other will be at St. Anselm in New Hampshire, January 21. You've suggested he may actually show up to one of those, do you think?
Yeah, I mean, obviously, he's going to have the benefit of a last-minute drop-in. Everybody wants him to participate. He's going to take a look at how his caucus is going in Iowa and make that decision right beforehand. And clearly, if there's anything that threatens him in New Hampshire, they'd be crazy not to have him debate, especially Nikki Haley, if that's what the stage looks like then. So, yeah, this could be a really crazy January, which is exactly what this election needed.
Yeah, well, that's what we're in this for, I suppose. Jeannie, I guess I'll ask it a little bit differently then. Did Donald Trump or Nikki Haley win it last night? What's your thought?
You know, for those on the stage, I think it was really hard. If this was a one-off, I think DeSantis did pretty well, but it's not a one-off. Nikki Haley won on the stage because she did no harm to herself. But the reality is that nobody is still able to compete with Donald Trump. And that is the reality. Nor has he suffered yet. And that's a question, does he suffer in the future? But he hasn't suffered yet by his decision not to be there. So, I think The reality is this debate changed very, very little as we think about where primary voters are. And so, sure, if Nikki Haley does better than expected in New Hampshire and Donald Trump shows up at one of these future debates, that's going to be important. If he implodes going forward, people may look at the fact he didn't participate. But up to this moment, his lack of participation has done nothing to dampen him in the polls. And that's quite frankly where we stand at this point.
It's remarkable. He's back in court today. He's talking about being a dictator, joking about this 2 nights ago, and his numbers are pretty much the best that we've seen yet. Rick, I want to compare and contrast a couple of moments last night. Chris Christie was booed, and boy, he's getting used to that as he went after Donald Trump. Vivek Ramaswamy was cheered when he went down the 9/11 conspiracy road. Look how these play against each other. Here's Chris Christie last night.
I want you all to kind of picture in your minds Election Day. You'll all be heading to the polls to vote, and that's something that Donald Trump will not be able to do because he will be convicted of felonies before then, and his right to vote will be taken away. You know, look.
There you go.
Here's the bottom line. You can boo about it all you like and continue to deny reality. But if we deny reality as a party, we're going to have 4 more years of Joe Biden.
It wasn't much later when Vivek Ramaswamy went for it with a multitude of conspiracies here. We're not just talking January 6th. We're talking 9/11.
Why am I the only person on the stage, at least, who can say that January 6th now does look like it was an inside job? That the government lied to us for 20 years about Saudi Arabia's involvement in 9/11? That the Great Replacement theory is not some grand right-wing conspiracy theory, but a basic statement of the Democratic Party's platform? That the 2020 election was indeed stolen by big tech? That the 2016 election, the one that Trump won for sure, was also one that was stolen from him by the national security establishment that actually put up the Trump-Russia collusion hoax that they knew was false.
So clearly he could have kept going there. Chris Christie booed for what he said. Vivek Ramaswamy cheered for what he said. We'll have more time for this. I know we're down to our last minute here. What does that say about the people who were in the room last night?
MAGA-Bama. That's what you got in that Tuscaloosa auditorium. It's well represented in Alabama, MAGA, and that's what they like. That is like red meat to the MAGA-Bammans.
It's not even QAnon, but really fascinating. As you know, as I mentioned, this isn't just Jan 6 we're talking about, or all the elections that we can remember. It's 9/11. And a lot more where that came from. Rick Davis and Jeannie Shanzano just getting warmed up on the fastest show in politics. We'll have a few more moments from the campaign. We've got breaking news from Capitol Hill now. It's from the Speaker of the House with a warning to the White House. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P 500 index holding very close to session highs right now. 34-point gain with the S&P at 45.83, up right now by about 0.7%. We've got a rally in mega caps, and that is spurring a rebound in stocks on speculation that the AI boom will keep fueling market gains. Right now, the Dow is up 87 points, gain there of about 0.2%. NASDAQ Composite Index up 178, up by 1.3%. The NASDAQ 100 Index up 216, up by 1.4%. 10-year yield 4.11%. We have got the 2-year yielding 4.58%. Gold up $4.50 the ounce right now to 2,030, up by 0.2%. Bitcoin, a retreat there, dropping 1%, 43,402 on Bitcoin. West Texas Intermediate crude oil now is up 0.2%, 69.48 a barrel, and spot gold up 0.2% to 20.30 the ounce. Dollar General says deflation is beginning to show up in discretionary categories, and in some cases, the company plans to pass that on to consumers with lower prices. Dollar General down now by just about 0.3%. Rival Dollar Tree is trading higher by 0.1%. Recapping a Thursday rally underway, could see another winning week for the U.S. stock market. S&P right now up 33 points, up by about 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
I learned early in my career from one of my mentors, Frank Barnaco, to beware the Dear Colleague letter and beware writing them, because that means something, and it's usually not good. When you get the email or the memo, Dear Colleague, as opposed to Dear Joe. And that's exactly what the president got today from the Speaker of the House. Dear Colleague, not Dear Joe. Quote, I do not intend to have the House consider any further short-term extensions. Mike Johnson writes, the Fiscal Responsibility Act, he says, is the law of the land, supported by over 2/3 of our conference, and it provides the framework from which we are negotiating final outcomes. Read down a little bit further here. While we understand the very real security threats in theaters around the world, i.e. Ukraine and Israel, yesterday's failed Senate vote has demonstrated there is no path forward on Ukraine funding without meaningful, transformative change in policy at our southern border. Recalling around this time yesterday, President Biden sent the shot across the bow from the White House, urging the Senate to pass his supplemental funding request, and it went down, as expected, failing. Democratic Senator Dick Durbin called it disgraceful.
People are dying, fighting and dying in Ukraine for their freedom. We've stood behind them every step of the way. And to allow Congress to step away from this obligation, I think, is disgraceful.
So picking up the pieces from here is going to be interesting. Senator Tom Tillis, Republican, of course, making clear that this is not a Republican problem when it comes to Ukraine.
Anybody who thinks that this is some game to prevent Ukraine funding needs to speak with more Republican members. We support, a supermajority of our conference supports Ukraine aid.
Let's reassemble the panel. Rick Davis and Jeannie Shanzano with us for the hour. Okay, it's Joe Biden's move, I guess, here, Jeannie, as they're trading Dear Colleague letters and messages from across town. What should be the response from the White House? No more CRs are coming.
Yeah, I mean, first of all, I have to agree with Dick Durbin. It is, not particularly stunning, but really, really shameful. And, we thought maybe the toughest thing would be reconciling between the House and the Senate, or getting things past the House. And now it is the Senate that is standing in its own way. So I agree with him completely. It is shameful. I do hope there is a path forward, but as usual, time is running very short. Sometimes in Congress that helps. So maybe that will help move things forward. But, the idea that they are stuck on this is incredibly problematic. And so I think the president and his team have to do what they've been doing is to make the case that it is in the United States' best interest, strategically, security-wise, and economically and so forth, to move forward on this and to pass the supplemental bill that was submitted. And, any changes they want to make to that, go ahead, but they have got to get this passed before the end of the year, because we all know what's going to happen when they come back.
So where's your gut here, Rick? The two senators at the center of these border negotiations. The Democrat Chris Murphy says talks are stalled because Republicans are making unreasonable demands that cannot pass the Senate in the end. Senator James Langford, speaking for Republicans, says counter proposals coming from Democrats wouldn't make any difference and wouldn't lower the number of illegal border crossings. Are you feeling like we're getting closer or moving further away?
You never can tell in the Senate until something pops out. I would say the best thing we got going for us is the Christmas holidays is coming up, and that's usually the backstop to getting things done. Look, I got to remind everybody that Biden put into this supplemental a border security component. So it just goes with saying that you were going to discuss border security as a component of funding the Ukraine, the Israel, and the Taiwan components of that. It's a 4-component bill, and one of them is border security. So the fact that there is a debate on border security shouldn't shock anybody, but let's get over that debate. Let's get something that we can agree to. Our border is porous and it's only getting worse. And I would think Democrats, I know that there's a limit to what they want to do, but this is cutting against them in this election cycle. And so they got to do something that shows more leg on border security.
Is Chris Murphy the Democrat who should be leading this genie? I know that he's typically involved in negotiations. He's a prominent member of the Democratic conference in the Senate, but he's from Connecticut. Should the party be putting forth someone else to generate a breakthrough?
I think Chris Murphy has proven himself time and again to be a very sober thinking, reasonable guy. We saw that on gun control, for instance. So I do think, to your point, he's respected. He is not from a border state. So, somebody could raise the question of whether, in fact, he is the right person to lead this. But as we all know, it's not just border states who are suffering from this issue. So I have no problem with Chris Murphy leading this. I do think he has proven again to be a good negotiator with Republicans. But I agree that Democrats, and they have said that they will move on that, fourth point, which is border security. But the idea that they're going to move as far as Republicans are insisting, just moving to the House for a minute, H.R. 2 is simply a non-starter for most Democrats. So they've got to come to a middle ground. It is to all of our benefit that they do. But, let's just step back for a minute to hold up Ukraine, Israel, for a debate and movement on something that we need, but that has not been done for decades, really, is really, really difficult when you're looking at a few days to go. So yeah, the president put it in there, move forward as they can, but we've got to get Ukraine done and Israel done this year. Border security we desperately need. But again, we've been talking about this for years. So to jump this in and to think it's going to move forward this quickly, I think it's a high hurdle. And, sure, they can negotiate it out, but in this short period of time, it's really tough. And we are moments away from a presidential election year.
Rick, did this dear colleague letter from the Speaker of the House just make a government shutdown a lot more likely next year?
It's hard to tell. You can tell from the tone of the letter, he's getting some pushback from his own caucus about whether or not they're going to have another CR. And so I think this was a shot across his own bow to say, look, we're all going to live or die by these appropriations bills, and we need to get to work and pass some of these appropriations bills, because I'm just not going to give a green light to another CR. That's not a message for the Democrats. That's a message for Republicans, and it's concerning that he had to send that publicly to them.
That's fascinating. New polling numbers out as we consider this idea of funding Israel, which is held up in all of this, Jeannie, from the Associated Press, NORC. It shows Joe Biden's approval on specifically the handling of the Israel-Hamas crisis, conflict, war, whatever you want to call it, is back to where it was before this all started on October 7th. 59% of Democrats approve of his approach to the conflict. It fell to 50 in November when he was being criticized heavily for civilian casualties. And it's back to where we were in August in this poll. In fact, it's a couple points higher. Does the revised messaging on this have to do with the numbers in our final moment here, Jeannie, or do people just forget?
You know, I think it's not only the messaging, I think it's what we've seen on the ground. I mean, the pause was a very important aspect of this, as was the fact that they were able to get some, not all of the prisoners released. So it is the action, I think, that people are responding to, not just the messaging, but certainly the messaging helps. And so this is what the president and his team were feeling good about. They wanted that extended. Of course, that didn't happen. But I do think in this case, people are looking at what they were able to accomplish. And that is meaningful to people. And if they are able to get another pause, I think it will also be meaningful. But obviously much more important for what the fate of these hostages than anything poll-wise for the president.
Jeannie Shanzano and Rick Davis, always a great conversation. We're going to pick up straight ahead with the old walk back that we're seeing now from the college presidents who testified in that hearing on anti-Semitism on campus a couple days ago. Just blistering criticism ever since then. And they're trying to right the ship. We'll talk to Rick and Jeannie about the messaging coming from college campuses ahead after we check world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. Israel's military says its mission to destroy Hamas's tunnel network in Gaza will take months and leave the territory virtually unlivable. Bloomberg senior reporter Anthony Squazine has been speaking with Israeli military leaders. He says this is likely to add to growing international criticism of Israel's war in Gaza.
I think they do realize it's a problem, but they haven't really spelled out a way out of this, and that's adding to the criticism. There's no sign of any real thought to what comes on the day after.
Bloomberg Anthony Squazine reporting from Tel Aviv. After the administration's request for aid to Ukraine and Israel failed on the Senate floor yesterday, negotiators say they are not giving up. And while the U.S. faces new questions about its continued support for Ukraine, global backing for the fight against Russia is not looking much better. We get more on that from Bloomberg's Nathan Hager.
Global support for Ukraine fell to about $2.3 billion between August and October of this year. That's a nearly 90% drop from the same time a year ago, according to an analysis from the Kiel Institute for the World Economy. This puts Western support for Ukraine's fight against Russia at its lowest level since January of 2022, the month before the invasion. Kiel's research director says with U.S. support uncertain, Ukraine needs the European Union to pass its long-awaited $50 billion aid package for the war. In Washington, I'm Nathan Hager, Bloomberg Radio.
Live Golf has apparently enticed another golfer to leave the PGA Tour. The Wall Street Journal is reporting reigning Masters champion Jon Rahm is set to leave the PGA for a multi-year contract that would be among the richest to date. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.